Very good morning to you. Welcome to Trade Live with IG on the 28th of October. We're getting near Halloween, but there's nothing spooking these markets apart from Chris Beecham this morning.
It'd be scary if I was wearing a hoodie, though, wouldn't it? Could you imagine?
We almost got him in a hoodie. Almost.
I don't know how to get in it. I don't know.
Or out of it.
No, or out of it, no. A bit like a straitjacket.
Right, good morning to you all then. How are we? Gavin Ackers, the British Indian, Andrew McKelvey, Parky77, Shrimp Fred, Paul Williamson, London Guide. Somebody was messaging me on TikTok last night, and I want to know who it was because they said they watch the show every day, but I'm not sure if in the chat. So give us a shout in the chat. We're chatting options. And Chris, how are you doing?
I'm very well, thank you. I've had a good weekend away, so...
Yes, because you only got back late on Sunday, that's why you were home
reasonably
yesterday.
late, so I got Luke to stand in. So we're down in Dorset, Sherburn. It's a lovely town. Have you been?
No.
It's really, really lovely. Yeah, Sherburn Gallery in Dorset. I think it's Dorset.
And were you playing on your organ?
No, I didn't do the playing. It's my singing. Yeah. I don't get that joke, Gallery. I don't get that. Yeah, we were singing for the weekend, so it's a really nice building, lovely town. So
Fantastic.
the weather wasn't bad either. So.
Oh, really?
Yeah. Actually, no, Sunday was a bit cold, but Saturday was lovely and sunny.
Shall we have a look at the weather outside this morning?
We've all come in soaked this morning because it's that kind of, drizzle where you don't think it's really rainy, but you end up...
I didn't even bring a jacket. Didn't even bring a jacket this morning. Stupid. 15 degrees. I've got a hoodie here, so I'm fine.
You just hop on the district line, don't you? So you just literally hop out of Cannon Street and...
Yeah, but Uber have gone really cheap on their cabs now. Oh, it's just so
We're not paying for that, I hope.
Who's we, sorry?
So we, the company.
The royal we.
The family.
Yeah, let's have a look at what's coming up on the show this morning. We got a real start of earnings season. We're going to go through some earnings in a minute. But myself and Beachy are going to take you through opening bell. Then you got Guess the Chart. What country are we in today, gents?
Oh.
Yes, he hasn't decided yet.
Yeah, that's code for they don't know yet.
Yeah. Fast markets, we've got Luke and Beachy taking you through fast markets because then I have got Elliot Harris coming into the studio at 8:35. We're going to talk all things options. He's going to be feeling very confident today because...
Really?
Yeah, Elliot and I have got a bet on 7,000. He says 7,000 before my 6,000 S&P 500, and he's getting...
He's doing all right.
Eeringly close. And last time he was in the market had just dumped down to 6,500, so I might have been crowing about it.
Fair enough, but you can't deny he's been right so far. It's only a jump. What if we get 7,000 before the end of November, and it just doesn't go anywhere from there? That's...
No, if it touches 7,000,
okay,
then he wins. I've got to buy him dinner.
Ah.
Right, I'm going to give a blatant, desperate request out to all the fans. Very sad. Let's get it over and done with. I am up for an award on Thursday, which is the Finfluencer Award 2025. I would absolutely love if any of you would fill in the form. Who you want to vote for is absolutely up to you, but you can see, I'm sorry, you've got to go through all these different, you've got to vote for one person. But there we go, best economist, Finfluencer, an outstanding individual, oh, that's me out, who simplifies complex economic concepts, provides practical financial insights, and influences public understanding of finance. So clearly, PensionCraft is the best one for the job there. But yeah, if you would drop me a vote there, that would be much appreciated. Phil is going to put the link on the chat just in case. But yeah, apologies for the desperate. I see Chris tapping away as we speak.
I know. How many times can I vote? More than once, or just?
Yeah, for somebody else.
Vote early, vote often, as they say.
Right, let's go into overnight action. Right, I want to go straight to the most anticipated earnings releases because that is the story of the next few days. There we have. It's not crazy today, but there's enough there still to get our teeth into, isn't there, Chris?
Yeah, it's about, is it 2/3 of the index over the next this week and next, isn't it? I think in total. I don't know what it is in market cap level. Somebody cleverer than me can work that one out. But it is a fair whack, isn't it?
Huge.
Whatever how much of that is. But yeah, massive week for earnings this week and next.
And the big boys in the next 3 days.
Yes. So Meta, Microsoft, Apple. Where's Amazon? There it is, Thursday. And then Apple as well. Yeah. So it's always sort of make or break week, isn't it? That's what they get in the press. Is it make or break week for earnings? Now, if you look at earnings season so far, 166 have reported. Earnings beat of about 7.5%, which I would say yesterday to the desk is above the 10-year average. The 5-year average is 8.4, but the 10-year is 7.5%, so we're just above that. Yeah. And it's actually in line with what we had for all of last earnings season. And
that's, of course, because earnings were cut after April. The big unknown whether tariffs were going to have an effect. And now the company's coming out and saying very little effect.
Yeah, and there were a few people yesterday saying, it's because mostly they're getting round it. And the reason why tariffs aren't, because as a foreign company, if you've got no US operation, you can simply dump the stuff at the port and they're not checking properly because they're not set up for this. If you've introduced a tariff regime on a customs service that's been used, obviously checking for narcotics or whatever, and suddenly you've got to check for tariffs as well, it's probably fairly easy to get around it. So there is a suggestion that there's more than a little bit of fraud going on with this. So that's why it's not being passed on.
Got you.
So that's one reason why it's not really going through. Okay. And there has been passed on. It looks like it's sort of half and half at the moment between consumers and the company themselves.
Yeah, yeah. And they seem to be able to put up prices on everything by a little bit to make up for the little bit of their goods that are being tariffed as well.
Yeah, exactly. So, and they're obviously the shipping it through Vietnam, whatever, these kind of ways around it seems to be the way it's working. But I think the lesson of the weekend is that both sides don't want a full-on trade war, and the markets have been very good at sort of sending that message. And if you look at the performance of US and Chinese stocks, they are mostly pacing each other, really, step for step. So it's a sort of a message from both indices that, no, we don't like tariffs, and we'd rather you didn't have a trade war, thank you very much.
Yeah, Canada on the page with that as well.
Yeah, poor old Canada. I mean, you have to wonder if Carney rang up Rob Ford and said, "What the hell are you doing? You've annoyed him now this time."
Yes.
But Trump's point was it's manipulated speech. It's not. It's exactly Reagan's speech. And initially, the Chinese embassy in the US tweeted that speech back in April.
I'm actually amazed it hasn't gone viral and just everybody.
Well, yeah, I think I've certainly looked it up and watched the thing in full, and it's definitely not AI. It's the proper recording from 1982 or something.
Yeah. The best Reagan one I like is when the balloon pops and he said, you missed.
Yeah.
What was it, weeks after he...
weeks after his assassination attempt. Yes, because he was famously the one who got caught on a live mic. He was going to give an address to the nation.
Right.
And as they were just warming up and going to go, and he didn't realise they'd gone live, and he said, "We begin bombing Russia in 5 minutes." This went out.
As a joke.
Yeah.
Wow.
Always never trust a mic.
Yeah, absolutely. Good stuff. Thank you all for taking the time to do that as well. Julian, didn't realise there's so many influencers. And Andrew McKelvey, has Rachel Reeves been nominated in any category? Is there a Chancellor of the Year?
There should be, in so many ways. Outstanding in her field, but not in a good way.
Yeah, outstanding. Yeah, certainly stands out in what she's done so far with national insurance. Okie dokie. Well, let's take a little look at the Times this morning. What are we seeing? Nothing really on the front page news-wise, just the usual asylum seekers. If you're going to have a game of bingo,
what's today's headline?
Yeah, then I would imagine that Prince Andrew would be there, asylum seekers would be there, and something bad about Labour. So we tick the boxes with all those. Oh, and the spy case in China as well.
Yes, yeah.
But Nelson Peltz has come in to bid for Janice Henderson. This is an interesting one.
Oh, okay.
That's
Nelson Peltz to Janice. Hey, there you go.
Yeah. So Janice and Henderson merged back in 2017 for a combined $6 billion And Nelson Peltz, of course, who has bid for Heinz in the past. He's bid for Cadbury, and then also got involved with Disney. Kind of failed attempt at getting involved with Disney.
Didn't have a fairy tale ending.
He has, now made a bid. He already owned 20%, but what we didn't know, and what the Times has gone a little bit down market there, is that he's the father-in-law of Brooklyn Beckham.
Well, you've got to give it an angle, haven't you? So otherwise, most people would read that and not know, I suppose.
In the Times? Who
Well,
cares?
you've got to get the clicks. It's all about the engagement. That's the most important thing.
What is happening? And so it's
Only 12% rise. It's not massive, is it?
well, it went straight to the bid price.
Right.
So $46. So it's actually trading through the bid price.
You've got to hope somebody else is going to be flushed out to bid for it.
Yeah. So that is Nelson. What else do we have there? Tom Hayes suing UBS over the LIBOR.
Brave, I think.
They did throw him under the bus.
They did, but then the judges, because I think, did we discuss this when he was sort of cleared? The way the judge, he said essentially the prosecution mucked it up. And the judge said, if you'd gone for the proper test of, does this look like misdemeanor to any normal person?
Yeah.
Then they would have, but because they were trying him a different charge, they could clear him on that basis. So,
So they didn't
we'd
necessarily.
like to clarify he was cleared before we say anything else further, just for the point of it. But yes.
Yeah, seeing as he's in touch with his lawyers, clearly.
Yes.
They didn't say he was innocent.
No, exactly. But he's going for more than 400 million in debt. Where's he calculated that? That's going to be the key question, isn't it? It's like my non-farm payrolls forecast.
Well, 200 wasn't enough, and 500 would have been too much. But that
$500 million in damages would sound a bit too rich, wouldn't it? Really.
It will be an interesting one. Of course, what he's saying is that he was thrown under the bus to protect the management because the management knew about it all along, and those things could never happen, could they?
No, not at all.
With our friend at SocGen, I'm sure
exactly.
SocGen had no idea Jerome Kerviel had that much exposure to the Euro stocks.
Yes, it's fine. The bank was either asleep at the wheel or ignorant. One of the two. Which one would you rather be?
Yeah. And funny, we don't hear about the people going to jail for making huge profits, do we? Can't recall a single one.
No.
I wonder what happens to those profits.
Yes. Let's not wander into this slightly more.
Right, so that is Sunday Times. That is the Times. Anything else there? Diageo, Alistair Osborne talking about Diageo needs to sort out its succession. Of course, the CEO, terrible performance that she's had there. The share price down 40% since taking over.
Yes, and you had, was it Shore Capital saying a month ago there were the brands they should flog off to raise cash, conduct a buyback, essentially stop the rot in the share price and sort of focus more.
Right, HSBC. Looks like they have had decent numbers. So upgrading their profit forecast, shrugging off a drop in the third quarter.
Despite Bernie Madoff, is this a headline from 2009? I don't know where that's come from.
Oh, they've taken a $1.1 billion provision because of Madoff.
Banks taking a provision for something? You don't see that very often, do you?
Not this week.
No, yes, but the problem is for HSBC, they've had a fantastic run. So if you look at the shares, where are they now? Above £6 a share again now?
Yeah, do we have your screen there?
Let me just see if only because I apologise, it's more than above £10 a share. HSBC.
Is it really above £10 a share?
Yeah.
Wow.
Which has obviously come off the back of these huge gains, if my network would work. Over the long term. No, Google Finance isn't playing ball this morning. So
I had that yesterday as well, actually, and then we had a fire alarm. You did miss the fire alarm well yesterday.
I know, I had to cover for you, didn't I? Yeah, Karen.
Apparently, we got to the bottom of it. It was somebody vaping on the floor above us. So
we can definitely say it's not one of our staff
Good
these
work.
days, at least. So.
Let me check HSBC. Right, so you wanted, oh my goodness, what a run it's had.
It has delivered massively recently since. Another post-COVID star, isn't it?
And this does, kind of underlines how great the FTSE's been this year. It really is forgotten about the UK banking stocks.
European banking stocks, really, but yeah.
Yeah, have, really helped drive the FTSE higher and higher.
And all of that, and you got nearly 5% yield on that as well. So
yeah,
if you look at the much longer term chart, it's not as great. It's been a more disappointing performance from the 20 years before that, sort of up to £8, back down to 4, rinse and repeat.
It's basically as soon as we started raising rates, isn't it? It's doubled since we started raising interest rates. It shows you once you get onto a trend, there's always the theory banks do better from higher interest rates. Obviously they do, but right at the start of something, I don't want to pay £6.60 rather than £6.40.
Yeah.
No, it's gone to £10.
Yeah. You had plenty of opportunities to get on board that one, and did very well all the way through 2022 as well. So there was your hedge when everything else was coming off like a train.
But yeah, if you've a UK portfolio of a couple of the banks, a British Airways, a Rolls-Royce, and what's our other big performer? BAE.
BAE. Ostensibly a very boring portfolio, but has done very, very well.
Yeah.
And has also paid you a very chunky dividend on that to go with it, but yeah.
There was some news on BAE yesterday. So Turkey buying some of the Eurofighters. So a really, let me get on to a shorter term chart there. God, yeah, that's come off a lot. So what's happened to BAE in October then?
It's interesting. I haven't seen specific news to go with it because maybe it's a tyranny of high expectations. We were talking about yesterday to Bloomberg about Goodwin, which is the other defence firm on the 250 that has doubled its forecast and has literally roofed. You've not seen
right. And is that a defence?
That's defence as well.
Right.
So almost it's one of the few other non-defence firm that isn't BAE or Rolls-Royce. It's
right.
Clearly piled in. But yeah,
This is because Trump's stopping all the wars, isn't it?
Well, there is that. Nobel Peace Prize is in the post, you would have to think.
Next year.
Next year. So that's interesting. Yeah, BAE's taken a knock, but you'd still argue you think it'll come through. It's all about yesterday about Germany plans to spend 350 billion euros on defence. So clearly there is still a bonanza coming down the road. So obviously the problem, if you're looking at this now, is when does that really start to show up in the revenues? When does that really start to come through? Because the sort of 28 times earnings, there's not too much room for disappointment in defence. I don't know what the average PE for the sector was before this, but not high.
No, not high at all. So the story here came out, I think that was 4 o'clock yesterday. That was the spike. It was Turkey are buying 20 Eurofighters, but they're also buying 24 planes from Qatar. Now, the problem is, and you see the share price came down again there, people don't know whether that is Qatar saying, right, take our old ones, Mr. Erdogan, and we'll buy some new ones.
Snazzy new F-35s, yeah.
Or is it them retiring the Eurofighter completely? And that means, of course, that would be a negative. So it's we just need a little bit more colour there from Qatar's defence plans.
Well, they don't need defence now. They've got the Americans, haven't they? Signed a defence pact. So.
And drones.
Drones.
Don't need
well,
planes anymore.
Yes, because Turkey's built its own aircraft carrier purely for drones.
Wow.
Which is really interesting that they're sort of doing it on the cheap, because I suppose the most expensive part of the operating of a carrier is your pilots.
And where's it going to sit?
Well, it'll pootle around the Black Sea and the Mediterranean, and because it's kind of a counter to the Russians, most obviously.
Yeah.
And to scare the Greeks when they're feeling bored, I suppose.
Right, Financial Times, we haven't looked at there. Now, this is an interesting one. $100 billion stock swings expose the fragility beneath Wall Street rally. Bit of a desperate headline, I feel, this morning. The reason that we've had so many $100 billion swings in the market this year is because the market is at a much higher market cap.
Yes, it's like Dow rises 100 points. Yes, well, that's not very much, is it?
Exactly. But what this does expose, which is an interesting one, and that is quite a nice visual, isn't it? It exposes some misconception over what happens when a market goes up and down. I think a lot of people still make the mistake that when a market goes up $100 billion, it's because people have bought
$100 billion.
$100 billion. And generally the number is about 10%. So it would take $10 billion to send the market up by 100. And it takes maybe even less to send the market down by 100. Because of course the bids disappear at that point. So, when we talk about market caps of $4.5 trillion, $4 trillion, that is just a hope figure. Of course, a large number of people could not sell their stock at those prices, because when they do start to sell, then of course the market comes lower, and that money just evaporates. So it's not real, and I think that's a big misconception that you've got to take into consideration with your own pot as well. It's only real when you sell it.
Yeah, it's only a profit when you've actually got rid of it. And is this story kind of a I don't need to dismiss it out of hand. Is it kind of a rehash of ETFs are bad for the market because they all have to do the same thing at the same time? This was the fear, wasn't it? Are ETFs eating the stock market? The answer's been probably no, but it certainly was the story that did the round a few years ago. But maybe because has April skewed these numbers? If you didn't have April and the volatility there, because in the article it says the index volume has been fairly muted. It's at the single stock level. I don't know, that 84 last year and 33 in 2022.
It's the zero DTs. So that's what's really throwing stuff around yesterday. If you look at the market yesterday, right? So let's see if we can get this. All the volatility now is happening in the last. Let me see if we can get it. So here, that move from 7:30 to 9 p.m. is because of options. So that's big options positions that they know they can manipulate the market into the close, and then all the hedging that goes on, driving it higher and higher.
So if you look at the article, the 5 of the biggest stock swings, you can get it up on my screen.
And then, of course, it does absolutely nothing after.
Yeah, those, fun enough, they're all in the same sector. It's NVIDIA from January, Oracle's move in September on my birthday. NVIDIA again, Meta back in 2022 because that was a shock, and then Broadcom. So, I don't know.
The biggest stock swings of all time. That was DeepSeek. So DeepSeek is the biggest. Wow, that was a big day, wasn't it?
Yeah. So it's huge moves, and obviously you had Qualcomm going up 10% yesterday because of the NVIDIA deal. But it's also an earnings season, this one and the last one, where misses are still being very heavily punished. So you do okay if you beat expectations, but if you miss, the market is very, very intolerant at the moment.
I'm really hoping that Starbucks is one of those. I am short Starbucks. I'm at that horrible juncture where I don't know whether to run it or close it ahead.
Get off the pot. Yeah, stop with the coffee puns. Yeah,
grind it out further. That's brilliant.
You're a bit latte for that
Producer
trade.
Phil just nailed that one.
Yeah, you see, it's had a fantastic bounce back. See, I would be more shorting it. When did you short it?
Probably around the 83 level.
Oh, so, fairly recent, in October.
Yeah.
You see, yeah, I'd agree with you now. I might be tempted to short it.
Okay.
Now, so it's price action.
Oh, that's.
I'm not telling you. I'm not. No advice.
No, that was financial advice, Chris.
Chris said, "You write this one down."
So Starbucks is a tricky one for me this week. Whether it's my only single stock short.
Okay.
So
Mr. Bear.
So
I
of
thought it was
course,
a bit more exciting than
that'll be what happens. The market will go down on Thursday, and Starbucks will be up.
Starbucks will rally, yes. So many times it's happened. Why is my short going up, my long going down? It's so painful.
Yeah. Took some profit on Ethereum yesterday. Ethereum had
Good bounce in crypto land yesterday, wasn't it?
yeah, it was, wasn't it? What else? Try to think what else. Still got the majority of positions. Marvell had a really good day yesterday, actually. Marvell was one that came to the party. I think that was up 3. I bought some gold miners yesterday. Now that is going to get hurt today because gold has, not only did it drop yesterday, tried to rally back to 4,000 and it failed, didn't it?
Yeah, it was not been a fun. It clearly hasn't settled yet. I think we were talking about this on, technically speaking, that show that I couldn't remember the name of yesterday. Sorry, gallery. They've not forgiven me yet, but it hasn't yet finished, has it? It's still got, I think, a bit more clearing out to do.
I thought
What you want is an
That was
FT
it
headline that says, "Is gold's rally finished?" And then you go, yeah,
it literally they called the top, didn't they?
yeah, they probably did, yeah. So I think you've got to see it coming back down. It'd be nice if we were obliged with this 50-day moving average. It came down to about there.
And where is that? Sorry.
What, the 50-day?
Yeah.
38.50.
I think that makes sense. I can imagine it trading there.
Takes a lot of the froth out.
Yeah.
And then, what as I say yesterday, watch the price action. But yeah, we'll see.
In fact, I might sell some puts there because I would imagine that will hold. Right, it's probably time for us to have a break. Let's do a quick 90 seconds and we'll be back with you for opening the London Stock Exchange this morning on the... Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Well, all of you that are about to leave the house and go off somewhere, it's a very different picture here in London than it was 20 minutes ago. Oh, I'm going to go out and get a coffee.
Yeah.
That's yeah, Phil's saying there's a coffee machine here. They gave out free coffees yesterday. They don't have any decaf. I only do decaf now.
Why?
Decaf's for wimps.
Of course it is.
What, like non-alcoholic beer?
Yeah.
Go on, the rebel that is Chris Beecham.
Non-alcoholic gin. Have you tried that? It's just flavoured water. It's ridiculous.
I don't think I would go down that route. Right, we've got 30 seconds to the open, Chris Beecham. What are we going to be looking at this morning?
So HSBC on the bell, see how they reacted a bit more, and then a bit of AstraZeneca. Gold
see.
miners.
Opening calls. Anglo American up 1%, on track to meet 2025 guidance. And HSB looking up 3%. We've got a Barclays buying Best Egg for 800 million. Evoke looking up 3%. My good friend Michael Taylor did message me this morning saying Evoke, one to watch this morning. Strong Q3 results with revenue up 5% year on year. Management expect EBITDA to be ahead of consensus. What's the biggest winner this morning then? Is it HSBC? Yes, it is. Chris Beecham, good call.
There we go. Don't get them right all the time, but there we go.
Not too much else there, is there?
No, Tesco. There we go.
Tesco 461. Oh dear. Oh goodness me. What's that?
A bad sound.
Yeah. What's happened? Oh, I can't even see what it is. Did anyone else see what that was? Why am I not getting the... I don't like that.
BNP down on the French index, down nearly 4% though.
Okay, let's have a quick look at UK and then... Right, so...
Poor old Fresnillo getting whacked again.
And BAT down, BP 432. Yeah, and Lloyd's down 0.5%, even though HSBC is strong. Interesting. But Lloyd's are at 87 now, so that's, you know, officially broken out. Let's go to the story there that Chris was talking about. BNP Paribas. See if there's anything out in those.
Were they the ones that were sanctioned last week?
Numbers.
Was that them last week on the Sudan thing?
Is that why they were down 7 last week?
Yeah,
right.
They're worried about, they sort of took the numbers that were given out in the conversation, and because there's only a few people, if more people applied. But yeah, okay. So numbers this morning, okay.
So group revenue is 12.5. Yeah, look at that. The consensus was 12.8. So even a miss at the revenue. How can you miss revenues by that much?
Yeah, nasty. Just interesting that comes, of course, as the French index sits at its highs for the year, or near the highs as well. And we've got more French political turmoil potentially on the horizon next week. So,
right.
What else is new, really?
Confirming net income target for the full year, and a whole other heap of French headlines there, but not helping the share. So the stock down 3%. Rheinmetall is the second biggest loser, back down to €1,700. And SocGen going down in sympathy.
BNP was at an 18-year high in May. Now it's had a nasty, nasty couple.
Yeah, how much has it retraced?
It was.
Do we have a quick look at BNP?
Yeah, there you go. Can you see that one? So there we are. Oh, it's our 18-year high. Back in August. Can't read my charts. And then you've seen it come all the way down. So that is, and that was last week's drop.
Yeah.
I think, on that lawsuit news. So maybe deep value here, back where it was in April. I don't know.
Deep value. On the upside, we got Deutsche Telekom, very boring, E.ON and RWE and Danone. That is your defensive basket. If you're going to buy defensive in Europe, those are the 5 names you would go for. So nothing happening there, really. Let's have a...
what's BP? You said BP was down. Yeah, Shell down as well? Because oil is off by 1.5% this morning because OPEC expecting to increase production in December.
Yeah, you got miners and the Shell down 50 basis points, BP down 1%.
Fresnillo, top loser again today, was one of the big ones yesterday.
Antofagasta down 80 basis points. Remember, Antos also... when they mine the copper, they also mine a bit of gold as well. So that does have exposure. Ooh, Art of Investing, we're going to get hurt this week. We got exposure to the gold miners.
Well, it's been the right thing to do, so you've had to take a bath sometime.
Yeah. Everyone has to take a bath sometime.
Just try living in my house for teenagers.
Impossible to get in the bathroom. Are we talking low teens or getting angry teens?
Mid-teens. Angry? We don't do angry no more, we do sulky. That's what we do.
Right. But is Dad still in favour?
Non-communicative.
Is it Kevin and Perry?
Yeah, it's a bit that way, isn't it? Oh, no. Harold and Kumar, I don't get that reference. I get a Kevin and Pei reference.
It's so unfair. I hate you. Right, commodity land. Then we spoke about gold. Let's look at how silver is doing. Yeah, there it is. It's shadowing it down 1.4, just as weak as gold is this morning. As oil is, Brent crude down 1.3 as you stated.
US crude, yeah, down off by 1.4 as well. So looks like the downtrend reasserting itself there quite nicely. So seems to be working out well this trade week. But then last week's started well and hasn't really gone anywhere. So we'll see.
Currency world. Yen, that's stronger actually, isn't it? Yen stronger by 0.5%, 152. The Nikkei, did we have that overnight moves, guys, on the Asian markets? No, forgot this morning. Good. Right, I see somebody still.
If you want a chart on it, but there you go. So still above 50k. Yesterday's celebrations,
but down 0.5% today. So Japan down 0.5%, China down 0.5%, and yeah, little bit of profit taken.
10,000 points on that index since the beginning of August. That is quite something.
And what's this now? Bloomberg headline: the EU is in talks with backers of a €5 billion critical tech fund. European Union discussion with anchor investors. They're actually doing something.
That'd be a change.
Will back companies on the continent working on quantum computing, artificial intelligence, and other strategic technologies. Now, speaking of those, shall we have a look at defence holdings? Are people still in it? Let us know if you are still in it there. Defence holdings at 250. Then let's look at our friend Pinsana, because I see somebody in the chat says it is up. And yeah, it's come right back, hasn't it? 117 trading there. It was higher on the open this morning. What about SWC? It is, it's down, well, it's not really traded this morning, has it? 55, 65 widespread there. Get one of your buses through that, Chris.
Buses, maybe.
Right, I think that's pretty much us for the moves then. We've got Luke Moore coming in to join Chris. What are you looking for the rest of the week, do you think?
Well, obviously, we have almost forgotten about the Fed tomorrow, which is a crazy thing to say. But yeah, so see what that says. Do they clear the way for December as well? Because I think we're guaranteeing, obviously, Bank of Canada today as well.
Sorry, just chart up on the Fed. What's there, please, guys?
So that's expected, and then ECB tomorrow and Bank of Japan Friday. So there's a load going on. That's your, is that what?
So that's October. We're guaranteed to go down to 3 3/4 to 4.
Still very much betting on.
And then December, we're guaranteed to go down 3.5 to 3 3/4.
Do we not get a Santa rally if they don't cut? Can you imagine if they don't cut in December and that just spoils the rest of the month? But there we go. And then January, fairly split.
Yeah, January.
As you'd expect, really.
Yeah.
Nobody's thought that. And nobody thinks on Christmas at the moment.
50% chance of another cut in January. Wow.
You had, what's his name yesterday, didn't you? Was it Kevin Walsh yesterday saying that the Fed would go down a lot more? So the auditioning for the post has started again, it seems. Right.
Yeah, of course. Let's just finish there with a quote from Cathy Wood. Cathy Wood does not think that AI is in a bubble. She does think it needs a reality check.
It's quite interesting from her. I do agree with Cathy.
So
I don't think it's a bubble. I still don't think it's a bubble.
No, a reality check sounds about right.
Yeah.
15%.
Well, we are overdue.
50%. 15.
Okay, 15. That's like you're saying, I thought it was 50% there. Yeah.
Yeah. Very seldom do we have rallies like we've had without some kind of 12 to 15%.
You have to pay the piper at some point. There's no argument there at all. Just trying to predict when it is fruitless. But
yeah,
again, it's 2017, 2018. I think is your parallel here. Quiet, and then eventually reality.
Take a look at that. Actually, that's because that is exactly.
Boston Frank saying about the cap to GDP ratio 225%, and the stocks have gone up 3 days in a row. if they were to pause here, it would not be surprising. Let's put it that way. With so much, such an action-packed, jam-packed, as Jeremy Corbyn said, or something about on the train. So much going on.
So this is what we're talking about there. Very similar pattern there, as you see.
What a dull year it was, 2017. It was so painful.
Yeah. So we started the year at 2258.
Barely ever had a 2% down day, I think it was, really.
Yeah. And then January
carried on for a while just to get everybody in, and then you had the first drop of the year. And then actually did continue to rally. And then you had October, November.
2872 to 253. So it was, 10%, exactly 10%, but that occurred in about 30 hours.
Yeah. It was very much everything, everywhere, all at once.
Good stuff. Right, Luke Moore will be here after the break, and then you've got myself and Elliot Harris talking options world in about 25 minutes. See you then. Good morning and welcome back to the show. It is Fast Markets. It's a pleasure to be here with you, Chris.
Yeah, it's a pleasure to have you.
Nice to have you. I made it back. I didn't burn in the fire yesterday, so we survived.
Burn in the fire?
The fire alarm.
Oh, the fire alarm.
The fire alarm, yeah. I'm back. So
I watched the chaos from home. It was so entertaining watching you leave the building and then back again.
Yeah, it was. You can prove it's live TV when everything melts down and we have to go and deal with it.
Yeah, great fun.
Yeah, good. Right,
well, we had a winner on Guess the Chart.
Yeah, Kraft Heinz. That is an impressive pick. I'd say I don't think I've ever looked at Kraft Heinz as a stock.
No. Earnings today, is it, Gallery? Okay. What an absolute dog of a stock. $90 in 2017. It's just not found.
So tell
it's not full of beans. Thank you.
I was going to say outside of
jump through some spaghetti hoops on that one.
Outside of the brand, okay. Outside of the beans, can you give me a couple more of their brands?
They have loads, don't they? They're one of the sort of food companies that is absolutely everything.
Yeah,
that's a good question.
What do you reckon? So,
it's all American rubbish.
All American. Capri Sun, Philadelphia.
Lovely.
Kool-Aid, Weight Watchers, Jell-O,
Kool-Aid, drinking the Kool-Aid.
Drinking
Don't
the
be drinking the Kool-Aid with
Kool-Aid.
that one. Lunchables, that crime against humanity.
Ketchup, of course, is Heinz ketchup.
It is, yeah. So
Not just
Heinz
baked
beans, Heinz ketchup, Heinz spaghetti.
Yeah.
Spaghetti hoops as a child, yeah.
Yeah, I suppose. Well, they're going to be up already, aren't they? Because what's this? Kraft.
Oscar Mayer wiener. Yeah.
Kraft Heinz, they are indicating absolutely flat. The pre-market's just opened up, of course, because we are an hour ahead in the US.
Of course, yes.
We are indeed.
But this week and next, or just this week? I think it's just this week, isn't it?
I think it is just this week. Yeah.
Just get everybody confused for a week and then back again.
I think it is just this week. Right, let's hit some fast markets. What have we got in the chat?
Archer Aviation. Okay.
Archer Aviation. Now, Archer Aviation, from my memory, these are the eVTOL company. Is this the small?
Ding, you got that right. Yes.
Yeah, because
I've got in California.
I've got a small position in Joby, which are doing something very similar. Joby Aviation.
Oh, so what do they?
Let's get the chart up.
They make something a bit like. I'm sorry.
So eVTOL, I'm not sure what it stands for. Helicopters, very small helicopters, is what they're trying to build. Air taxis, air-based taxis.
A bit like the Osprey, the US Marine one, the tilt rotor things.
Exactly. Yeah. So let's have a little look.
Pretty dangerous aircraft, actually.
I'll put that onto your full screen for you. So, massively enjoying 2025 so far. Off its highs. $14 plays 1123.9.
Very, very volatile journey.
Super volatile in our extended hours. So now online and tradable. Are we coming into earnings for these guys? Let me just have a quick look. Archer AV.
November the 6th.
November the 6th. Okay, so we've got a week.
Earnings supposed to be minus 20 cents a share, reflecting a year-over-year increase of about 17%.
Okay, so
getting better, not great.
Off their highs, one would imagine tip ranks has been fairly neutral. Okay, they've only got one coverage with a buy rating at $14, 18% upside. Look, I would say this is a speculative play. I think these things are. There's got momentum behind them. So Joby, who are in the same space, just got an investment from, I believe, Uber to push kind of journeys between JFK Airport and into the centre of New York. So there is certainly appetite for this. I believe there's some more coming through in the Middle East as well, in Dubai.
Everyone wants a flying taxi.
Pretty cool though. Would you get in one?
Maybe. I don't know.
You're more likely to get into a horse and cart than get into a.
That's not fair.
to get into a helicopter. I'd love it. I think it'd be really, really cool. But it will become like the norm all of a sudden. The first couple of people will use it, similar to kind of the Waymos and the driverless taxis.
Yes, I've not done that yet either, so that's my next.
I'm in actually in Austin over New Year's, so I'm looking forward to trying testing them out.
Okay.
Right, what have we got next?
Let's do Goodwin.
Goodwin. Okay, let's have a little look at Goodwin.
So Goodwin is one. Bloomberg asked me about this about a month ago because there was almost no coverage of this company across the city of London's. There's your chart there. There is that chart, which is roofed, I think is the word you're looking for there on a monthly chart.
That is
£20 a share, 200. Most of that has come obviously in the last 2 months. So you're saying with Rich, if it isn't Rolls-Royce and it's not BAE, there's your defence one, essentially.
Okay, and that's monthly?
That's a monthly, so if you want to see the daily.
So it's basically been up almost non-stop since April.
Yeah, it's definitely up by leaps and bounds.
What's the step change there? Because we've obviously moved higher.
It's absolutely rocketed through earnings. I think yesterday had a statement and it said it's doubled, revenues have doubled, and it plans a massive share buyback, I think was the plan.
Massive share buyback?
Yeah, I think it announced that.
Interesting, okay.
And again, because it is so little covered and little aware, it's really sort of the liquidity is not there. So it's a huge, huge run. So you do wonder at what point they're going to do a share split, though.
Well, yeah, of course. I mean, I'm looking at it now. On the stock exchange this morning, it's traded 600 shares, but only one share is traded through the actual exchange. So everything's been dealt through kind of market makers and liquidity providers. I do think, just flicking on to the news here, if you want to just flick over to my screen because I've got it all set up here. A piece on the special dividend. So they're a mechanical engineering company. They've declared a one-off special dividend of £5.32 per share, which is, as a percentage, 5 into 208 is 0.5%.
I think so.
Yeah, about that. So not that special, but it's definitely moved the market. I don't know anything about them. I like the idea of rocketing away.
Yes.
But I'm always cautious of shares that go up and to the right so aggressively like this, because those parabolic moves tend not to last.
So it has no analyst covering the stock. This is the crazy thing, and that's just me talking to Bloomberg yesterday about it. But it's an absolute stormer, really. But it's 68 times earnings, so it's going to be delivering on that. It's going to be hard. But yeah,
Okay, interesting.
Let's do Amazon. Let's do a sensible.
Amazon.
Sorry, not a sensible company. Apologies, good bit, but yeah, slightly less mad share price.
Yeah, let's have a little look. Paul Williamson's asking us, Amazon to cut 30,000 jobs. Interestingly, Paul, that was in response. I saw them saying they were going to cut 600 over the next coming years.
Yeah, and they want a lot of this is automation,
robotics, automation. But yeah, they came out and said that 30,000 jobs is what
get rid of all those workers in their warehouses that aren't allowed to go to the toilet or whatever it is because they're too busy filling packages.
Come on then, what are we looking at? When are their results? They're this week, aren't they?
This week it's Thursday evening after the bell, I think he says.
They are, I seem to remember looking at these and looking at the Mag 7, and they're actually on one of the lowest PEs in the Mag 7.
Yeah.
So they are considered.
It's your next value stock in the Mag 7 after the video last week.
I know, yeah. Considered one of the cheaper names in the Mag 7. And they don't distribute any money.
No.
There is no dividends whatsoever.
No, they are getting, it is tightly controlled. But then this is the thing about PE ratios, you can't look at them. You shouldn't look at them in isolation. You shouldn't just say this is X, therefore Y. It has to be what's the context of this against the sector, and what is the context of that against the company's history. So what's the 5-year average? I don't have it off my head, but what's the 5-year average PE for Amazon? Is it cheap or expensive relative to where it was before? Yeah. And I'm guessing at the moment it probably is maybe on the cheap side, given the way the share price has struggled a bit, really, in recent weeks.
Well, you look at that though, and you look at the pricing, it's trying to push through, is that $240? Yeah, 240. Once, twice, rejected it kind of late summer. Yeah. And then now we're potentially trying to get back to that target. Would you be looking at buying it here? I'm never normally a fan of buying ahead of earnings.
No, I think you've got a bit of a risk there. If you certainly not unless you're going to trade it, but it's had a good start to the week, so there's clearly some positivity. But I think you're expecting it to run higher, but it's been a tough one because you've been buying these dips and they continue to dip, and you feel sort of stick with it at the moment. Yeah. You've gone through a tough.
But you've got
summer.
You look at that though. So you look on a long enough time horizon. That 200-day gets bought. The 200-day moving average gets bought every time it's down there, and so really that's your stop loss, right? If you're looking at it from a longer term horizon.
Yeah. Once it gets back above it, we're still above it now. We had a test of it recently, so that the health check on the chart is coming out quite nicely that way.
So would you say you maybe look at it post earnings, see where it is?
Yeah, I'd be happy to get it. The risk, of course, is that it just roars away, I suppose. It's your risk here that it doesn't give you an entry point. But yeah, I'm probably doing it right now, I suspect.
Okay, so potentially looking at something like a short puts below that 200-day moving average, perhaps?
Yeah. If you're expecting that bad a reaction, I don't think you'd get that bad a reaction.
Well, probably not. I mean, maybe not even. The 100-day looks a little closer.
Yeah.
Maybe a bit more bang for your buck there, but certainly.
Yeah.
Certainly some juice in it.
It's back below 220 and then argue for.
What would you classify Amazon as a company now? Is it still a retailer?
Consumer staples at this point.
You're making it sound like a value play now.
Exactly. So consumer discretion, yeah. If you look at it with the broader sector, I think it's still, and the market dominance, of course, is there, isn't it? Really.
Yeah, completely. Okay, Gavin Ackers is asking us to look at RVMD. Let's have a look at that. The ticker doesn't ring many bells in my head.
Revolution Medicines, I think is what.
Okay, you've got it there.
Here we go. Here's your super.
I will try and find out what they do.
Bounce.
Revolution Medicines.
Big gap higher in mid-September. What are we looking at on this one? Market cap of 10 billion, so it's a bit of a, well, UK terms big and US terms a bit of a tiddler. But
looks like it moved up yesterday on some cancer drug trials, orphan drug designations in pancreatic cancer.
Okay.
I've got to be honest, Gavin. I think with some of these stocks, you've got to understand the science more so than the average person, because you've got to know what you're buying. And I've had plenty of these over the years where you hear from someone that this drug is going to be the drug that's going to cure cancer, or this is going to be the thing that happens. It could do, but it could also squat right back in. So the risk on biotechs are so high because I think you've got to look at the diversification of the drugs within the company, and are you betting the house on one? Are you betting the house on one horse? Is that what I'm saying? It's not, is it? Are you betting the farm?
Betting the farm on one.
On one horse. And without knowing the ins and outs, I'd love to hear some more about it. I mean, that's broken out cleanly above its, what's that, $50 breakout above there, and looks like it's hopefully going to hold it. Let me see what it's doing in the pre-market for you off of the exchange. Revolution Medicines up 0.7%, traded 58.43. So looking like it could hold that high so far this morning. But yeah, for me, biotechs, you can get hyped into them very quickly. Just kind of see how much of their revenues is going to be down to one drug, and what is the potential success or decline of that one drug.
Yeah. Small allocations, they can let them run, they can do really well. I think it's the key thing, isn't it? You buy a few and then spread the risk around.
Yep, definitely. Right, what's next? Have we got any more on here? Drone Shield, Briar Tuck. Drone Shield, good potential. Their motto, bad for humanity, good for business.
Oh, good. So the next is tobacco stocks.
So should we put this one in the sin stocks bucket?
Yes. Good Lord.
Let's have a look at them.
It's not coming up on mine.
Drone Shield. Drone Shield. It's an Australian stock. And that'll be why.
Not on mine.
Let's have a little look. I've got them up on my screen here. I'm going to say that is pretty much every concentrated defense stock. That is. I mean, it's not quite the same chart as Goodwin, but you can see a very similar type of pattern. Look, is without knowing the ins and outs of the company, it's had a top, it's pulled back in. It looks like it's basing. You'd argue the last couple of days it may be making higher lows. You know, if it breaks above $5, does it become interesting to look at again? Probably.
Okay, so it's got a platform that includes its threat AI software, so there's your keyword in there, AI. First order for the platform has come from a European multi-site customer on NATO's eastern flank, so essentially probably Poland, I think is probably the guess there. And it's the thing of the last 3 years of Ukraine, of how drones have become. Drones in the air, drones on the ground, drones in the sea, it's everywhere. It's a new hot topic of how you can use them. You've got the Ukrainians obviously offering the Americans thousands of drones in return for missiles that didn't come off, but it is how they've, I wouldn't say they've revolutionised warfare, because that's a big thing to say, but they've certainly proved their worth. And easy, cheap to build, that kind of thing.
And effective.
Yes, yeah. Of course, it's action reaction. There's countermeasure, that kind of thing. So they found ways of defeating them, or at least sort of combating them with their own. Saw a great video yesterday of a Russian and Ukrainian drone crashing into one another on their way to their respective missions. So
I saw. I mean, it was about a year or so ago now, but they would put netting over the top of key supply roads. So that in theory the drones couldn't come.
Yes, they're getting, or the fishermen in France are giving their netting, because you can put them over the road, so then it helps defend them against drones. It's fascinating how this works.
Hey, look, if it is anything that can kind of lower the cost of human capital of these things, I'm kind of all for. Not that I'm in any way advocating for war, but if less people are dying, then fantastic. Yeah, look, I mean, technically, without knowing the kind of the ins and outs of the financials and order books and kind of productions, technically speaking, it's had a move. It's pulled back into some level of support. It's trying to make higher lows, stop below kind of $4, try and break out above $5. Maybe a potential idea there. Yeah. Cool. Okay. Have we got time for one more? What do you think?
PFE.
PFE. Pfizer. Pfizer is PFE.
Yeah.
Pfizer. Bad news.
Petrofac was PFC, I think it was as well.
Petrofac, which is
delisted.
being delisted, yeah.
Pfizer.
What a dog.
Poor old Pfizer.
What a
Do you
dog.
get a dividend for your trouble? You probably do, don't you? Yeah, 7%. Okay. Well, you should hope at that kind of size.
Well, yeah,
that
but
kind of share price performance.
Yeah, I mean, that's just going to be, they haven't lowered their dividend coverage yet with the share price move.
Brutal.
So therefore, it's a decent yield. Pfizer. I think they're still going to be trading like they've got the hangover from the COVID vaccines.
Yeah, 11 times earnings. So, you know, not aggressive. It's just not.
But it's not as interesting as other biotech plays. It's a consumer healthcare business. like I've never really traded it. We don't get a huge amount of interest from clients on it.
No.
Certainly not kind of post-COVID.
COVID hangover is yet to clear, and the fact that it's still operating even below these 2024 lows is just not great from a chart perspective. As 11 times earnings, 7% yield, and it probably has a fairly good cash generation. It's probably not bad as an investment, and you're probably safer off buying it down here than you were buying the hype at the end of 2021.
Yeah, I was listening to a podcast the other day about stocks like this, where there's a load of business that gets dealt above where you are now. And they said it was almost like having bodies hanging in the sky. Like everybody that's bought, if they haven't capitulated, they're in theory going to sell as soon as it comes off over that. And the longer this goes on, the more motivated they are to sell as soon as it gets nearer where their average price was. And it just, if you consider it like a supply and demand curve, there's so much supply that could sit above there that people are going to need to push through in order for this to then break out and become back into a trend that you want to play with. It was just an interesting way to look at it.
It's very sensible, interesting way, yeah. But the price action, you have to have the healthy price action to show that the market likes it, and it's not there yet. Pun very much intended with Pfizer definitely needs a shot in the arm. That kind of thing.
There you go.
Yeah, $30 is your big level, I suppose.
What does your tip rank say? What are we looking at?
What does it say?
Tip rank loves it.
Yeah,
Tip rank loves it at a 10. What is it?
12 holds and out of 17 rating.
Click into the outperform to see why it's got there. So if you do, can you zoom in your screen just a little bit so we can put that in the center of the screen for people? There we go. Analyst consensus is to hold. There's been some positive bullish sentiment. Interesting that hedge funds have been increasing positions in the last quarter.
It's got to be. It will be cheap on it. Again, not looking at the PE ratio just in isolation, but you have to look at it and see, well, it's clearly a lot cheaper than it was, and therefore provides some sense of, you've got maybe more of a margin of safety than you would have done buying it up at the 2021 highs. Sort of channel your inner Warren Buffett there.
Well, yeah, I mean, obviously, that's not rocket science.
No, but it's cheaper. No, is it cheaper? It's cheap for a reason, that kind of thing. So Boston Frank, I got the Pfizer COVID vaccine shots, and then Julian buying Pfizer last week. So maybe there's something there.
Trump pushing for cheaper medicine, regards Pfizer. Okay. What's the dividend on Pfizer? We said 6.9% away from the numbers.
6.9, chunky.
One more? What are we doing?
The Legal in General? No?
Legal in General?
Up to the gallery. What is this?
Legal in General had some news yesterday. They took on the pension liabilities for Ford. I was on my nicely prepared notes that the fire alarm then meant I couldn't talk to you about yesterday. Let me see if I can get that story just while you through the technicals.
Well, there's a share price that has admittedly gone sideways over the last decade, seeing a bit of momentum recently. It will chuck you an 8.8% dividend yield in today's dividend competition. Here's your winner. 60 times. I'm not quite sure about the PE ratio. Check on that one.
Yeah, so here's the story that we saw yesterday from Legal & General. They have agreed a $4.6 billion pension buyout deal with Ford. If we can chuck my screen up, gentlemen, please. 4.6 billion UK pensions deal. It says it's going to cover the retirement savings of 35,000 people and has put L&G on course to achieve the highest value of their deals so far this year. So much so that the majority of L&G's revenue has attracted private capital giants Apollo and Brookfield, which is interesting. So does that mean that L&G potentially becomes a target?
Maybe. But again, it's this idea that because you've got some big American players coming in, the margins are going to get squeezed. So you have to wonder about their dividend as well at these levels. Yeah,
you do potentially. But no, look, I think people own it because of the dividend coverage. That's why people own, you can own the suite of them. Phoenix, L&G, what's the other one? There's a couple of other big insurers.
Aviva,
yeah, of course, they just took over Direct Line, didn't they, last year?
Yep.
The people allocate towards them for their income.
Yeah. Because it's predictable.
It's predictable. It's sensible. Of course, insurance is based on mathematics and risk and splitting across the pool, etc. So they have to service the money that they've got.
14% annualized return over the last 5 years. There we go. Oh, and breaking news, Spain's blue chip index finally tops 2007 record high. So even Spain joining the record highs party this morning.
Get in Spain. Do you want to bring the IBEX up so we can have a quick look at it?
Oh, God, dear.
Oh, dear.
Things I have to do.
We've got to make him work.
There we go. There's a nice trend. There's a very nice trend.
That is a very nice trend, actually.
And got away. Well, it kept with a nasty shakeout.
So that would have been the April shakeout, as every chart
Every
tends
chart
to
is the
look
same.
like
it's like
that.
the COVID charts of economic data.
Yeah, exactly. Wow, I had
very,
no
very steady
idea.
climb. Exactly.
I had
Below
no
the radar.
idea.
You've had a decent 60% return since 2024 April. So that's a very.
I wonder what I've never even looked. So you can't spread bet on Spanish stocks. So it's not something that we see a ton of business from. I'm going to see if I can quickly bring up some of these companies that I know who's in here. So in the IBEX itself, Iberdrola, the oil services business, Iberdrola, fuel company, CaixaBank, Grifols,
Repsol,
Telefonica. That's probably it, I think.
Yeah.
Aena, which is a telephony company, I think. I'm just trying to think now, every time I drive through Spain, you know, with a rental car when I'm on holiday, what kind of signs do I see? Impressive, Spain. That's actually mighty under the radar. Very interesting.
Yeah.
Cool.
Base
All right.
global rally. There we go.
Exactly right. Well, that was a semi-fast markets. I think we got through what, 5 or 6 different markets?
Yeah.
Yeah, pretty
enough.
tepidly fast markets. Next up, Rich and Elliot are going to be back in. Get your questions into the chat, and we shall see you soon.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome back, everybody. A very smug Elliot Harris sitting opposite, thinks he's going out for a posh dinner. As soon as we touch, it's one touch, isn't it?
It is a one touch, yep. I need to set the alert on my phone because you're not getting away with it.
So I don't think you'll need to set an alert on your phone, believe me. So yeah, just a reminder, I took the bet with Elliot about a month ago now.
About that, yep.
That we would touch 6,000 before 7,000, and we are creeping ever closer, 2% away.
Ever closer, yes. I need some recommendations from people. I've had the George Sank recommended in France. Nice little trip to Paris, possibly. I am going to sting the boy so hard, right? I am actually going to sting him so hard. Like, I want every side, every starter, lobster chaser. I've actually seen him starting to hedge on his account buying S&P futures. He's
for dinner.
He's that concerned about the lunch I'm going to sting him with.
I sold them yesterday.
Okay.
I did actually. What basically I'm trying to do is I'm buying daily 0 DTE call ratios on the days that it doesn't look like it's going to go down.
Yeah.
And that is helping me hedge, but also being long futures. Managed to, thank you for the free money at the weekend.
On the weekend,
Weekend markets is just paying out every week.
Carry on. Good. Yeah.
It's great. Does that come out of your bonus?
No, mine. No. That's run by the futures desk. No.
But yeah, it was interesting because it's looking up 40 basis points on the weekend markets, and then it opens up 1.1. And just remind everybody how those weekend markets are set up.
Yeah, obviously it's unique to IG, not the easiest to price. Obviously, I guess there going to be two drivers. Obviously, client demand. You've got to be very reactive to any business that comes in. Also, political events that are going on, any breaking stories. Generally, clients are going to be at the forefront of that. So you're very much led by client demand, really.
Yeah.
But we did still see a bit of two-way on Sunday. Hence,
Good.
Yeah, we weren't calling up quite as much as what the pop was.
But if a big whale comes in, then we do kind of go limit up, don't we?
Yeah, because it is very hard. Yeah, like we can't hedge it at all. No. So you're not really ever going to get really the concept of a whale, because to build a sizable position, you would be, your first field's probably there, and then the next one is possibly after that.
Yeah.
You are going to struggle to really build a chunky position on that, unless we've got decent two-way, which some weekends you do have. Like, say, a month or so ago, you had a big story on it must have been the Japanese election.
Oh, yeah.
There we saw real decent two-way. Yeah, so if you've got a similar whale on the other side, then absolutely, yeah.
Yeah. And it's great. It's just,
the great market.
nice way to spend Sunday brunch.
Exactly. Yeah.
Good stuff, right? Okay, so there you have Paul Williamson is saying private dining at Claridge's.
I quite like the sound of that.
That's the first. I'll see if I can come up with anything as well. Right, let's take a quick look in the market then, because gold is getting hit further. We're heading down towards 3,900 in the gold price. That at the same time as we're back down to $60 oil.
Yeah, but that correction's kind of been coming. You've got a feel in gold. It really has just been an unrelenting bubble. Many experts in the gold market have been calling this, and I think I read a comment in the FT that only a lunatic, could have ever saw gold get into the highs that it has. So these sell-offs are quite healthy for the market, so it hasn't come as any real surprise. Actually, and I'll come on to it shortly after. I touched on last time, came on, a fortnight ago. Gold IV was, I think, double the historical 10-year average. That's now come right back off. So gold returning to maybe a little bit of a normalised market, if you can.
So sorry, pullbacks are healthy for markets.
I think so, yeah. So, but we're not going to get on an S&P, but yeah.
I mean, that's over 10% we've had a pullback in gold now. We only need a 13% pullback in the S&P, and this could come back to you. Good, but yeah. So what's happened with volatility then in the market?
Yeah, so vol kind of across the board has eased. As I said, gold IV was by far the highest. In fact, Phil, can you guess up my first chart, please? Exhibit 1.
And this, of course, because the US-China
Exactly.
framework at the
That
weekend.
hasn't come as a surprise to anybody, surely.
Yeah.
Huge progress there made over the weekend. Market now beginning to look through the noise, you could say. And we've seen that in kind of, so as I say, that's been a big driver of the gold reversal. Any expensive tension there is kind of evaporated, if you like. S&P skews flattened also as well. 2 reasons. One, the demand for the downside has dropped off.
Right.
I think you'll be last man standing soon. And demand for the top side has really begun to come in. So you're seeing quite a shift in the skew structure, if you like.
That explains some of my view now.
Absolutely, it will. Yeah. 2-3 weeks ago, that skew on the downside was probably trading high 90 percentile. It's now back down towards 60 odd. Yeah. So just to talk you through this chart here, chart that I pulled up 2 weeks ago, basically showing your historical 10-year average, if you like. Gold was trading way over that, but you've seen a significant pullback. In the underlying, but also in the implied vol. So,
vol's gone down as the price has gone down.
Yeah.
Interesting.
Yeah. Just because it's kind of been the first letting off some steam, if you like. Which it hasn't shown any sign of doing since April, May.
No.
It's been So that's been a long time coming. For those of you who kept the faith, well played. I think you would have had to have pretty deep pockets to do that. But yeah, you can also just see the equity vol as well come off. VIX last week was off roughly 4.5%, down towards now a 16 handle, which is kind of, I would say, in the long-term average over the last 2 or 3 years of VIX.
Yeah, true.
Around there, yeah. So vol is ticking along, but a big week this week. You've obviously got a Fed, you've got a Bank of Japan on Thursday, and you've got some huge tech earnings out.
No risks there at all. So I can see
no risk at all, Rich. Absolutely. But the risks are rapidly fading. I've got to laugh at the comment, Greg's. Yeah, if Rich could have it, we'll be going to Greg's.
Back to Greg's KFC.
True Scotsman.
Yeah, good. My team looking after me there.
Yeah.
Skinny Grill's not a bad show.
I've not heard of that. Okay. So vol, it's a huge week. Fed, 25 basis points, fully priced in now. Okay. We've not had such a clear dot plot as this for quite a while. So you've got 25 basis points fully priced in for Wednesday.
And for December.
And
for January.
January's a 50-50 in terms of...
Sorry, you're right.
So there were people that were calling 3-4 weeks ago for a 50% basis point cut in deck. Felt very heavy to me, felt very toppy. Now, given the data delays that we've seen, that's completely off the table. So no real story there is going to come out of Wednesday, you would believe.
Yeah.
For example, if you were to have a look at the Wednesday S&P options, there's an implied market move of about 1%. Now, for a Fed, that is very low. Even further, if you've got a VIX trading around 16%, your average daily move on S&P is around 1%. So there's no extra vol being priced in by the market for a Fed. That's almost unheard of. Okay, so it really is as much of a non-event as we've seen.
Yeah, I have actually shorted the straddle on today.
Okay.
So, well, almost the 68, 65, 68, 70s.
Effectively, yeah.
I went slightly higher on the calls just in case, because I'm going to get hurt anyway if it goes up. So that was at 7 and 16. So 23 points for today. But then I had a crack at Wednesdays as well.
Okay, good.
Just to see how those acted, and that was the 70s and 60s. What was that? 43 ticks.
Yeah. So not quite a straddle there. If it were a straddle, it would be closer to 1%, maybe.
It's not much, is it? For
it's not for Fed, exactly.
Well, there's no right enough. There's no Mag 7 earnings in there because it finished.
Thereafter, exactly. Yeah. So you won't. Yeah. So no real vol coming from that Wednesday. However, on the tech side, huge event. You got 5 of the Mag 7 reporting this week. You got 3 on the Wednesday, 2 on the Thursday. Obviously, we are the only people brave enough out there to offer you daily options on the Mag 7. So certainly Thursday morning, worth a look on your likes of your Google.
9 a.m.
8 a.m. this week.
Of course.
Our clocks have changed. The US haven't. US change this weekend coming. So we'll be back to regular open hours next week.
So this is now my 24th year of trading with the time change.
Okay.
And I got on the tube yesterday at 25 past 1. I got out at 38 minutes past, and I went, what's going on?
It really throws you. It really throws you. It's
every
weird.
single
Every
year.
single time. Every single time.
I remember the clocks change on Sunday morning, but I didn't remember the fact that the market was open. So Meta, Microsoft, and Alphabet daily options will open at 8 a.m.
on Thursday.
On Thursday morning.
So you can really trade the market reaction after the earnings, which are obviously after the closing bell on the Wednesday.
So when they're all down 10%, I can still buy puts.
You can still have a go. Yeah.
Excellent.
So a big week, but more focused on the tech side than a macro level, I think. So.
Yeah, and unless what do we think he says in the press conference? He's not going to rock the boat. He's got no reason to, right? I guess he might have a little bit of a moan up about not being able to see any economic data.
Yeah, I don't think he will. Yeah, I'd be surprised if he was to make. Any sort of comments along those lines. Just got a comment there coming in saying, what type of IG account do I need to trade actual options? More than welcome if you want to open an account with, obviously, Tasty. Here in the UK, we did have that via the UK platform. That's now coming to a close. However, you're more than welcome to still open an account and trade actual physical options. The options that we offer here at IG are essentially a spread bet or a CFD. You never technically physically own the option. So behave in the exact same way in terms of the pricing. You don't actually get the physical exercise. So by all intents and purposes, they are the same thing. But if you want actual real market options, Tasty is the place to go.
Yeah, and I remind, away from the numbers, have you had your US account open yet on Tasty? Let us know there, because I know there's a few people moving their accounts over, with today being the last day. Yeah, today being the last day of positions there.
Okay.
Right, you showed us the VIX EQ versus the VIX spread before, didn't you?
If we can bring up that chart, that's chart 2. There you go. So this kind of just, again, I brought this up. This is trading at the moment back on historical highs. Okay, around 24. I.e., that's the difference between the VIX for equities versus the VIX of
broader market.
S&P, if you like, yeah. So S&P vol has come down. As I say, VIX index has come down to a 16 handle, roughly week on week, off roughly 4.5 points. So you've got your S&P vol coming down, your equity vol in what is a huge earnings week has gone up. So that's just taken us back to the highs again of 24. So once this earnings season kind of passes, that's going to tighten again, because you are going to see that implied vol on the equity side come off aggressively. But so big week, Wednesday, Thursday night.
It's I wonder. You're in next week, are you?
I mean, yep.
Be very
Always do.
interested sitting here next week, because Matt Arbour and I, opposite sides of the table. He was in on the morning of April what was the Monday? Was it April 11th?
Yeah, the second was the Friday. That was kind of the catalyst. That was when we really came off.
Yeah, so 12th, April 12th.
Yep.
He was sitting there, and it was really in the depths of the crash.
Yep.
And we did say, well, I wonder how we'll be looking this time next week. And of course, everything was great by then.
Yep.
So it will, this is as pivotal this week because these are the companies that are driving this market.
Absolutely.
Right?
Yep.
Kind of forget Nvidia because Nvidia's earnings are dictated by this week as well. So you get a really good read on those. Then you've got Trump and Xi as well.
Yep.
That we've now priced in a deal between those.
Yep.
Even though the framework didn't really cover Nvidia, it didn't cover the chips. It covered rare earths, but I don't think anybody really thought that China was going to stop exporting rare earths.
Yeah, I was reading an article, can't quite remember where, but saying that the market opportunity for Nvidia in China is still huge. Domestic developers just
Yeah, and there's nothing
can't
in
deal with the
guidance.
demand. Yeah, and so that's almost a free market, for them to go and take over. I don't know if Chris has mentioned this week, but so far 87% of S&P 500 companies have beat earnings.
Oh, Chris mentioned it. Don't you worry
That's
about
good.
that.
Versus historical average of 75%. And also a lovely line, this one. This week is the single best week of the year to be long S&P based on the 1 week average returns since 1950. So just
Historically speaking.
that's implied by the seasonality. Yeah. So we're already up, just over 1% on Sunday night and yesterday.
Yeah.
Today we're effectively flat. Yeah.
Could be this week.
This is the start of Santa's getting his uniform on. I think it really is.
My friends actually went for Christmas drinks with a Christmas tree up in Yorkshire.
Well, that is early.
I mean,
That's aggressive.
what is going on there?
That's aggressive. Well,
Uh,
yeah. So for me, we may be talking about. I was probably on a month or two ago talking about 7,000 and maybe feeling slightly dreamy. You would have certainly had that view. Now, I think that line's shifted way higher. Come December, I'm a buyer of 7,100, even maybe 7,200. Like, I was having a look at the deck.
it's not that wild.
7,000 calls, the 71 calls. You're not paying a huge amount for them.
Oh, what, for 71, 72?
Yeah. Yeah.
I would, 16?
Look. Have a look.
I might have some of those.
Let's have a quick look.
that might be my edge.
So, what felt like a little bit of a dream.
Do we have a year end? No, we've only got deck.
Yeah, so this will go off.
Come on, let's get the
Friday.
30th of December up there. Come on.
They'll be up. They'll be up Monday. We only do 2 end of month contracts. Yep.
56 minus 30, 26.
Okay. Yeah. So, they've gone up slightly. I don't think that's
all right.
early.
What about a 71, 72 and a half, 1 by 2 is 12.
12. Yeah. Yeah. If you come and saw me, I could probably do it 11, maybe 10 and a half. Possibly.
Yeah, all right, mate. Yeah.
If I can shape and spread off.
Good
I feel
man.
sorry for you as well.
Then we can go crazy. 7,000, 7,200, 1 by 3 for
by
3
3.
ticks that you would do me for free.
I'd be worried about the 1 by 3.
Why?
You could come into the auction and you could be sat on.
But your break even 7280.
Yeah. But you could, if we have a strong, let's say we have a good earnings this week, you'd stick on another 1%. Quite easy.
Yeah. No,
You didn't touch
agree
in
with that.
69.25, 69.50. You ever rally through November? I wouldn't want to be sat on that
What
auction.
worries you?
Short of 1 by 3.
What's the negative at the moment?
I just think all the risks are just rapidly drying up.
Thank you.
I really am.
What's priced in?
Yeah.
It's if you already know that,
Yep.
we know there's a China deal getting done. We know that the Fed's cutting 3 times.
Yep.
We know that you know, the companies this week aren't going to come out and cut their capex numbers on AI
Yep.
capex. So we're priced in.
Not quite priced in, but certainly.
Well, it is, because you haven't been able to tell me one negative.
True. Right now, I cannot think of an obvious negative that can stop this. But often,
this
often that is a dangerous sign. That is a dangerous sign.
Climbing the wall of worry.
That is when you fall
no
off
worry.
the ladder. That is when you fall off the ladder. Yep.
What interested me this week, all the talk about TikTok being a security threat and everything. Do you know this Kai Trump, his granddaughter?
Okay.
Great golfer.
Okay.
Unbelievable golfer. She went to the Ryder Cup and everything. She's quite a big hit on TikTok. Lying on the sofa in the Oval Office, doing a TikTok, saying, "This is so weird to be, scrolling TikTok in the Oval Office."
Wow.
what has the White House become?
Yeah, wow.
I mean, she's brilliant. I think it's great for.
How old is she? In the teens?
Like 12, 13,
Yeah,
something
yeah,
like that.
yeah.
But to be doing that in, bringing her granddad, making him real.
Yeah.
Right, and-
yeah, because kids of those age, they've heard of him, but only because I've probably seen all the skits and all the funny sketches of him maybe doing the fake tan and things like this, and
Yeah.
don't really know him for any of his content and actually for who he actually is. So for her to actually bring that down, yeah.
And then she's out on the White House lawn chipping balls into they've got a golf hole.
Oh, wow.
On the White House lawn.
Fantastic.
It's very funny. I'm not sure Americans, especially Democrat supporters, are too chuffed with it. But
I bet. Oh.
So we've got earnings, we've got Trump and G. What level would you start to get? Would you say that was enough?
What, in terms of?
As in, 2017, we felt exactly the same, right? And we went into January, and January we popped up another 3%, and we got smashed down 12.
Yep.
2008, we had a big 07.
Yep.
And then we went 8 days into January, and Jerome Kerviel had the Euro stocks down 8% in a day. Where do you see us in 12 months' time? Do you think we're at a sort of 7-7?
Not a million miles off. Yeah.
Right.
I'm
So this
not
continues.
above that. I'm not above that.
Yeah.
7,500, I think. Yeah, that's kind of where I think we'll.
Okay, so 5% next year.
Yeah. Which
It's not great, is it?
no, I think it's fairly conservative. I do think we're going to see 3, 4, 5% now.
Yeah.
I really do. And we're beginning to see that in terms of the market demand and also what we're beginning to see on desk. Beginning to see a lot more interest in that top side.
So if you were in my position and you were short upside calls, what is there an index that you would be happy buying that wasn't the S&P? We've seen strength in Japan, we've seen strength in India, FTSE 100.
Yeah, FTSE for me always feels fair value, really. Obviously has rallied, 9,400, 9,500. Touch high now. Obviously has lower vol, so I'm a big advocate of, and this is possibly the only thing that does concern me. Index vol to me has a floor. Okay, so we've been ticking along on that floor for quite some time now. Start of October, had a few catalysts on the Friday, didn't we? Had a few pullbacks, if you like, but all that did was just give people fresh chance to come and buy the dip, and we've seen that certainly on the top side on the calls. FTSE Vol on the front month is back with a 9 handle. Now, it doesn't go much below that.
Especially if you're touting a Christmas rally already.
So, if you bought options, and I've not got any empirical proof of this, but having sat in front of it for over 20 years,
It's near
I'm
enough.
right. If you bought options at 9% vol,
Yeah.
mainly even at the money puts, you might not get a pickup first month, you might not get it 2 months. But I'd say within 3 months, you are going to have some sort of pullback.
Okay.
So we're not far off hitting those historical floors now.
And what contract would you suggest, for example? Like a
Yeah.
March?
As I say, that's the only bearish bone that I've got in my body, just where bow is. So I've kind of got my stats, maths head telling me one thing, but my heart and everything else
Yeah.
is saying no. This continues. I wouldn't be buying a December because I really do think we rally, but maybe first quarter next year I can see us normalise slightly and just almost take a breath, if you like.
Yeah.
So I wouldn't necessarily.
So doing a calendar, buying debt calls, selling February calls 100 points higher.
Possibly. Nice trade.
Okay.
Yeah.
Let's price it up. Right, let's take a really quick look at the US Open then. Of course, that's been going on since 8 a.m. AMD, the loser on the day, 75 basis points. We're going to get Elliot to do the winners. IBM down 30 basis points. Berkshire Hathaway trading $486. Intel unch at $39.50. Nvidia unch at $191. Go on, Billy Bull.
Yeah. Well, there's nothing overly exciting, really. It's a very quiet opening, to be honest.
Alphabet 270. Wow.
That is mad. Well, you got your Amazon up. Yeah. No real shocks there. It's a very, very, very quiet morning.
Just read it out for our blind viewers at home, please.
So the blind viewers. Right, so what you got? Google up 0.6%. You got PayPal similar up 0.6%. Netflix up 0.3 almost. And Amazon up 0.3 as well, ahead of earnings this week.
I've had some Netflix actually.
Okay.
So I'm not absolute crazy, blind short.
Yep.
I am long Oracle, which went down yesterday in an uptake. It's great. I'm long Netflix.
Did you trade the options? You're asking me about the options on Oracle.
No, I didn't actually.
Okay.
Oh no, so I did.
Good.
I'm short the 320 calls and the 350 calls. Okay. So that's actually they've both paid very well. Okay. Sammy Peach booked the wrong contract for me as well. Traded the 350s, a bit 360s, so I had a 1,000 P&L straight away.
Oh, nice of you. Okay.
Yeah, but we sorted it. I confessed.
Very honest of you.
I said, you're giving me free money yet again. Netflix obviously has come down from 1,240 down to 1,100. Yep. So I've sold the $1,000 puts and now bought some stock at 1,090.
Okay. I like that trade. Yep.
Feels like enough. Enough's enough. Gold has been smashed through 3,900 as Elliot has been
continues.
Speaking.
Wow.
Where we can't get gold up there. Sorry guys, let's get this one up. 3,888. Wow.
That is taking a kick.
It's really a fall from grace, isn't it? Hey, I tell you what, as soon as my minister at church mentioned gold in his sermon, and that was it. That was the top.
Where'd you go to church?
HTB on Brompton Road in Knightsbridge. So it's where they started out.
Lovely church. I know it as well.
you did?
I went for the Carol concert last year,
Nice.
and I'll be going again. I've got some family over from Canada. It was lovely. Really, really, really lovely concert.
What day is it that you go?
We went on the Sunday, I think. Yeah.
Great. I'll make sure I go on the Saturday.
Perfect.
Elliot, thanks very much for joining us today.
Might be talking to me by then.
Yeah, we'll do that. We'll do the Carol concert and then go to dinner.
There you go. Sounds good.
No, I'm not paying for your whole family. Good stuff. What was that? Sorry, producer Phil. Coid is coming out. Have a Google. So obviously Coid came into the studio. That's the Crane Shares robot for the humanoids ETF. Coid came in. Coid has now got I don't know if it's a girlfriend or, but there's another robot going around on social media that is identical to Coid that you're about to see in the upcoming thing. It's very funny. He's like a little rebel, or it's a rebel version of Coid.
Oh wow, okay.
And it swears and it puts the finger up and all this kind of stuff. It's very
like
funny.
the Disney character Stitch.
Yes.
Okay.
Yeah.
Oh, cool.
Classic. Right, so that's coming up. It is, of course, Tuesday. Join us tomorrow morning. We've got Piers Buckworth in, as always, on a Wednesday. And Scotty Byrne's going to be joining me in the hot seat. So it is a real hot start to the morning. Join us then. And Elliot, thanks again.
Humanoid robots is a mega trend, okay? And it's just beginning. Morgan Stanley predicts there'll be over 1 billion humanoid robots on planet Earth in the coming years. It's becoming a $5 trillion industry. So this massive industry that's just at the beginning.
Hello, welcome to the show, and I am joined by a very special guest, Jonathan Crane, founder and CEO of Crane Shares. But Jonathan, you've got an even more special guest for us, right?
We do. We have a big surprise here today.
Oh my goodness, introduce
Here we go.
us. I'm so excited.
Please meet Coid, okay?
Hey, Coid, how's it going? I hear on the street, I've been getting messages since yesterday. Coid is the first, have I got to get this right, the first humanoid to ring the bell at the London Stock Exchange?
Absolutely. Yep. We're very proud to have Coid ring the bell to launch the Coid Fund on the London Stock Exchange. And Coid's also enjoying the time in London and has arrived and has been walking around and almost as a tourist, seeing all the sights in the city.
This is incredible. So trader friends and investor friends watching this, you can access Coid on the IG platform. Talk us through how you take a look at it's such a wide array of humanoid, AI, robotics related stocks. Huge selection there. How did you filter the top constituents for the stock?
Yeah, absolutely. So first of all, at Crane Shares, we believe global humanoid robots is a mega trend, okay? And it's just beginning. Morgan Stanley predicts there'll be over 1 billion humanoid robots on planet Earth in the coming years. It's becoming a $5 trillion industry. So this massive industry that's just at the beginning. And so in terms of putting a portfolio together, you look at the companies that are producing the robots, you look at the companies that are making the hardware, that are making the batteries, that are doing the chips, the whole ecosystem around it. And the ETF is a basket of 50 stocks. These are leaders in the global humanoid robot space. Many of them come from China, the companies in China, and then also the United States. And then we have companies from Japan, South Korea, Germany, and some other countries. And it's equal weighted too. So companies like Tesla and Nvidia are in the basket, but we didn't want those to, from a market cap perspective, to to outshine others. So we've equal weighted this, and also it will be rebalanced quarterly.
I'm glad you brought up the chips, because I also noticed you've got companies related to sensors, even rare earths. Talk us through the spread and how you decided to allocate this.
Absolutely. It's the entire industry of humanoid robots, and that starts with the resources like rare earth metals that go into the robots. It also is all of the parts of it. So the hardware, the battery, which is very important, the chips, and the sensors. So there's a whole ecosystem of leading technology companies that make up the Coid portfolio.
Fantastic. And for those of you watching, you might be asking, how soon before we see one of those, on our high street or in the shops?
I think today. So Coyd has been walking the streets of London, but I think this is now the beginning of the humanoid, revolution, let's say, and there'll be hundreds of millions to billions of robots in the coming years, and this is going to be a massive industry. So the Coyd ETF, really helps investors get at the ground floor of this exciting industry.
How soon? I guess everyone's asking at home or watching from their desks at work. How soon can we see something like Coyd become mainstream, right? Something like Coyd, perhaps, walking around the office or in shopping malls.
It's coming. I mean, it's right. Use cases today are you obviously factories and production centers that are in automation. Have a lot of robots involved. You're starting to see robots at shopping malls. In coffee houses, actually.
Yeah, like in Asia.
In Asia, exactly. Hospitals are starting to have robots, and then elderly care homes are having robots, and then universities too, and both for students to study the robot and actually look at getting into a new industry called robotics and humanoid robots. So, but I think the use cases are going to expand very quickly. So it's interesting, when we had Coyd on the streets here in London, it was like you could feel that it's the first interaction that the populations had with a robot up close like this. And
Makes it real.
Makes it real and approachable too. So,
I can tell.
Yeah, exactly. They actually the robots seem to even have a personality to them.
So take us through what Coyd can do. What can you program this robot to do?
Yeah. So we also want to thank our friends at RoboStore, okay, that are experts at humanoid robots, and they're clapping. I think it's some of the use cases are like I described. I mean, it can assist everyday life. Like we've seen robots even at trade shows, okay, handing out brochures and greeting clients. But I think the support where eventually everybody can have their own personal robot. And then it will be, obviously all this technology is to make the world more efficient and our lives more efficient.
Now, tell us, because I am very excited, more so, about what's inside Coyd. So those of you that watch the show, you know that I am extremely excited when it comes to tech stocks.
Yep.
Am I right in saying there's an NVIDIA chip?
Yes. So this robot actually, so the right now the leaders in terms of countries, you have the United States and China, okay? Japan, Germany, and some other countries, also even England, are focused on humanoid robots and the whole ecosystem. But really, China and the United States are leaders. But this robot happens to be from China, from a company called Unitree, but the chips inside of it are from NVIDIA. Okay.
So this is fascinating. You've got Chinese tech,
Yep.
but with a US chip in its heart.
Exactly. So I think although U.S. and China are developing their own humanoid robot industry, I think you'll see some sharing of resources. And look, where does it all begin? You need rare earth metals. That comes from China. Okay, that's good. That's a big part of a human robot. The chips are a big part. Both China and America, obviously, NVIDIA is a leader out there, and make the chips. The hardware, okay, I think China is becoming a leader at that, especially their supply chains, and the cost to produce is very competitive worldwide.
The fund, the ETF itself, is globally themed.
Yes.
Talk us through the reason for this, and where there is a majority. I would make an educated guess looking at your fund. It's China.
Yeah.
But talk us through, why you've also got exposure to Japan, Germany, and also South Korea.
Sure. Yeah. First of all, we think the humanoid robot theme and industry, it is global. Okay. And we wanted to make sure that we didn't just pick one country, that we offered the global solution. And I think a lot of these, the major, production centers that are happening in China and the United States, they'll expand globally too, and they'll go to other countries. So we thought this is the, KOID, COID is the first humanoid robot fund in the world. Okay, so CraneShares launched this fund. We wanted to be early at what we think is a multi-trillion-dollar opportunity and allow investors, give them access and exposure early as this industry really takes off. But to be responsible on that first portfolio, we thought it should be global companies with a concentration in the United States and in China.
Now, we've already highlighted that you're coming, so I already have some questions from our clients asking me to ask you, Jonathan.
Please.
What if we like the theme, but we're thinking more about stock picking rather than buying the overall industry?
Sure.
What would you say to that argument?
I think this is a situation where you want to buy the industry. Okay, this is, again, early stage of a long-term trend. I think there'll be a lot of excitement around this industry in the next few years. So there'll be a lot of growth within all these companies that are in COID. So rather than trying to pick one stock and we have 50 constituents, 50 stocks in this portfolio, you want to pick one or two or play it. I think it's more safer to take a portfolio approach to humanoid robots and you buy the basket, which is this ETF, rather than just try to stock pick.
And one of our clients also asking, what kind of duration are you looking at? Is this 5 years, 2 years?
Yeah, this is a buy and hold opportunity. Okay, I think this is the next 10 to 20 years. Okay, with Morgan Stanley predicting 1 billion robots in the next 20 years, a $5 trillion industry. This is one of these situations where you can really get in on the ground floor early, and I think this is buy and hold.
What other sectors are you seeing the most demand for, AI robotics?
Yeah, so obviously factories, production centers with all the automation happening, robots are a big part of that. We see hospitals, elderly care homes, also as good use cases, universities, as you mentioned. And then I think you'll also see in the retail sector, robots starting to appear.
Last but not least, I'm taking him home, right?
Yes, I do. We're going to say goodbye. That was part of this.
Thank you so much, Jonathan Crane here. Such a pleasure.
Thank you.
We're so delighted that you've set aside some time for us and bring COID to the show Trade Live with IG because it's you've flown halfway around the planet.
Definitely.
And also, it'd be great to get you when you're next here. To talk about, what the demand has been, how the ETF has performed, and the progress in this very exciting sector.
Yeah, thank you so much for having me today. It was a real pleasure.
Thanks for watching. For more questions, and I'll put them in front of Jonathan for you, contact us on ask@ig.com. Any questions for COID as well, I will help assist you on that. Slam the like and subscribe button. This is Trade Live with IG with myself, Angeline Ong, and Jonathan Crane.
And we are back. This is Overtime. I'm Ilias Pivac here in San Francisco. That is Dylan Radigan in Milan. Mr. Jamal Chandler, our returning champion in Chicago. Gentlemen, I guess thought is back in the box, and we're just going to go ahead and rally into this crazy week that we have in front of us.
Supernova, right?
So it looks.
Supernova.
So it looks. I believe that's the word. Yes.
If you had on your bingo card that I'd be the first one to say that, then that's amazing.
Thinking is for losers.
Clearly.
Thinking is for losers.
I mean, you've been spot on about that, man. I mean, this market is it's incredible. It really is in a multitude of ways. And I'm not even just talking about, obviously the market's up, it's crazy, but just the all the different things you can trade right now. I mean, you had crude up on the screen. That's been moving more recently. Ethereum and Bitcoin moving. We've talked numerous times about the different sectors of the market that are moving. Ones that took big tumble today was rare earth names, along with metals names. I think that's clearly the U.S.-China trade war trade, and
without question, I think
it's fascinating right now. But yeah, market at all-time highs.
I think there is without question a story here because when you look at what happened, I mean, we've been basically inching our way higher all day. The bulk of the move happens at the open. We really didn't do a whole lot as far as upside progress throughout the day. All of it happened right here. And that was, of course, that China news. So over the weekend, you have Scott Bessent out there saying, listen, this whole 100% tariff thing on November 1st, it's basically off the table. We've got this expansive deal. All that Trump and Xi have to do is basically rubber stamp it. And that was kind of the vibe. So they've set up a whole array of deals apparently, and when they meet on Wednesday, they're just gonna nod in their general direction, and that's it. So the market is clearly happy with some degree of hope that whatever scary thing there was to worry about on October the 10th when everything sold off, that would be this. That whatever that I've seen, that would be this. That whatever that is.
I'm glad you reminded me because I really don't. I barely remember when that happened.
See, there you go. There you go. So when you get this and the market goes holy moly, well, apparently not. And obviously this follows what was Friday's CPI report. You could see it clear as day on this chart. Here it is, right there. So you can see we went very quietly into it. It came. It was a little bit lighter than expected, 3% versus 3.1. We didn't really do much of anything for the rest of the day. We just digested in this spike. But this was it. CPI, boom, that was the whole day. Now we went quietly after this news that apparently the risk is off on China and the US. That is to say, we probably have some kind of de-escalation. So the question that I have for you gentlemen is less so what could go wrong, more so what else can go right. So this week we've got a bunch of tech earnings. There's some big names on this calendar now, Meta, Google, Apple, obviously. And we've got this China thing basically, it looks like, in the bag. No one is confused as to what the Fed is going to do. We're approaching 100% likelihood that they're going to cut. By the way, not just this time, but in December as well. And inflation is apparently not the world's biggest concern. So, what don't we have priced in yet?
We don't have the upside priced in yet.
The upside to which one of these
AI, of the efficiency, of the incredible abundance that is about to yield itself to the world as the profit margins of these corporations explode as a result of the fact that they can fire most of their employees.
Interesting.
Yeah.
Interesting. I have one question, and we brought this up on last on last call on Friday, and I think brought it up going in to first call Sunday. The question of sort of the disconnect between what's going on in tech itself and what's going on in the money spigot that feeds it. Because obviously we can say that there is the banks, and they were a problem last time, and I think anybody looking at what the banks look like now would say, well, they're probably not an issue now. But for that reason, because the banks have been made safer, tons and tons of money has been coming out of private equity and sort of adjacent things. And a big concern, obviously, has been that these are non-bank institutions, that they have ridiculous amounts of outstanding exposure because all of the money to fund all of this has come out from the likes of them. And when rates go up on them, they don't have the same kind of regulatory and capital requirements that banks do, so they're not safe. And all the bonanza blow up is going to happen there. Now, here's Blackstone. It's been down for a while and looks obviously not at all like the indexes. In fact, if we look at the beginning of the year, it hasn't even reclaimed its way back to where it was at the highs in late November, early December. It's not dissimilar for, let's say, Apollo, another kind of similar name in the vein. So square this circle for me. If the people that are funding this thing in large measure, if the capital behind a lot of this is as hampered as it is, but the abundance is coming, why not both, and why the disconnect? Why are these names so down?
Why not both what?
Why are the people whose investments are planting the seeds for the supernova that we're now watching, why are they so...
You're saying Apollo and Blackstone are the financiers of the supernova?
I'm saying private equity and non-bank capital in general, and these are sort of the avatar names.
I don't know if I accept that, though. I don't know if I accept that. I mean, I feel like the financiers of the supernova, I don't see how private equity is long the supernova, the same way that Meta, Microsoft, Tesla, Google. I mean, I think the supernova resides in the equity of the Mag 7 much more than it does in private equity.
Well, sure, but where does that money come from? I mean, where does a company...
From the equity valuation of the financial markets. I mean, Microsoft is not relying on Apollo for its cap table.
Sure.
Yeah.
But OpenAI is relying on private credit to a very large extent. I mean, they're making outlays out here billions and billions above what their last raise was. So there's a big bet here that they're going to come up with a bunch of money.
Maybe. But I would say that Apollo and Blackstone trade much more based on expectations for future rate cuts and their overall exposure to aggregate growth than they do to anything related to the supernova.
Oh, I mean, I would agree. I mean, I think it's both. And I think therein is sort of the interesting question. We have all of these rate cuts on the menu. We're confident that one of them is coming this week. We're confident that another one is coming on December 10th. And the markets are not only confident that there's more in 2026, they have about 50 basis points more than what the Fed has told them they're committing to. So there's this vast expectation of easing on easing on easing, more easing than the Fed has owned up to so far. Well, once you look beyond this year. And yet these exposed names are down. And I'm not saying that these individual companies are exposed to this or that. Who knows what they're exposed to? That's kind of the point. It's darker money, not dark, but darker than, let's say, the banks. But these are the sort of liquid avatar names for the non-bank lending universe. And I think they look very similar for a reason. There's concern. So to the extent that this is where the capital has come to fund every which thing, much more so than the banks in recent years, if they're also funding the supernova, and of course they are, then certainly not Microsoft, certainly not Apple. There's plenty of cash going on there, but the sort of larger universe of AI names, startups in particular, if this is what the funders look like, why?
Because they're incredibly irrelevant to the supernova, that they're not even secondary, they're tertiary. The supernova resides squarely in the balance sheet of the Google cap table, of the Microsoft cap table, of the Meta cap table, and the adjacency of publicly traded private equity is such a far distance from the epicenter of the supernova that it's not a relevant barometer of expected performance as it relates to AI efficiency.
In other words, they have money out there, but if they didn't, other money would come because the sucking sound that is the supernova is just waiting for money to come into it.
And furthermore, the private equity firms are much more a barometer of expectations of leverage returns as it relates to interest rates more than they are to any interpretation of future industrial growth.
Well, I think that's the connection. I think expectation of future sort of leveraged expectations of the future bake into them rate cuts, cheap capital, and the feeding of this thing.
Yeah, I think, to answer your question, I mean, I think it shows in the stock price. They're clearly not participating as much. If you look at like a SoftBank, like SoftBank looks totally different than like APO or BX, right? I think APO and BX are just not doing the same thing. I mean, I don't think we have it, but
I don't think we have that.
But just saying, like, from what I've seen, like, you could Google it and you can see the chart on SoftBank. It looks totally different because they definitely are invested in this whole situation. I feel like these guys aren't to some degree, and who knows? Maybe they know something everybody else doesn't know, or maybe they're just trying to zig while everybody else is zagging.
Could be. Let's see if we can get a chart of SoftBank.
And that's probably what it is. These guys are probably zigging while there's that. Maybe they're doing, I don't know, they're clearly doing more different type of deals, and then maybe they're doing a few more credit deals or something like that. But you're right. It doesn't look the same. And I think, it's one thing that the stock chart never lies. That's for sure.
Right.
I mean, as we were looking at, we don't need to pull this up, but we were looking at the idea of a UPS trade earlier, and that stock looks terrible. There's clearly something wrong going on there. So I think that this just tells you, like, these guys, they're involved. You know what I mean? Like, you can see it. And they've been involved for a long time, right? Like, they were choking on it early a couple of years ago, and now it's been starting to pay off.
That's the thing, is this is where a lot of the seed money comes. Again, not this specific firm or that specific firm, but this universe of money is where a lot of the seed capital for this comes in. And to your point, here are SoftBank ADRs, and you can see here, I mean, granted, this is OTC. We don't have it on our platform, but you can see this looks much more like NASDAQ than the others. I mean, this basically appears NASDAQ adjacent.
Yeah. So what are they doing to offset their risk? Or do they say to hell with risk? This is what we're here to do.
I'm gonna go with probably the latter. They're just like, listen, we have all the money in the world, and if we need to go to a few international conferences and scare up some more, we could. So let's send our guy Masayoshi out there and have him talk to his boy MBS, have him talk to whoever else he's got to talk to, and scare up some more, because they're not a timing kind of operation. They're an idea kind of operation.
It's very true. Yes, it is.
You're saying SoftBank specifically?
Yes. SoftBank believes in things and then invests in them, and if and when they don't make money, they just go bigger and more.
Well,
until eventually.
How's that different than Buffett?
It's not.
You know what I mean? Same thing. They got deep pockets. They can hold it out and wait it out.
Yeah, it's not that different. I think thematically the idea is it's whatever either one thinks is a good idea. I mean, I think the rubric by which Buffett values things is different than the rubric by which Masayoshi-san values things, and one is riskier in their appetite than the other, and the metrics are different. But thematically, it's, do you think that this company is worth more, and do you want to buy it on that basis? Yes. Okay, well then, if we're doing that, then we're holding until all eternity expires.
By the way, I didn't even realize that they approved a second installment of a $22 billion investment in OpenAI. I didn't even realize this. It just happened like yesterday, apparently. I didn't even see that news. There's so much damn news out there today. I didn't even see that one.
That's the interesting thing, is you look at, and this is to Dylan's point, that it doesn't really matter what this area of funding companies does or that, because the sucking sound is apparently so loud that if there's not money here, there'll be money over there. The commitments that OpenAI has made to buying stuff far exceed how much money they've raised, but here they go, raising some more. And just chipping away now at the pile. Ostensibly on the assumption that they can raise however many they need to raise. I think they've made commitments to the tune of $600 billion or so at this point.
I mean, I think that's what I'm getting at, which is that it's easy to explain why this thing's ahead of itself or overvalued and all the rest of it. But it's also, I could also argue that but not for the tariffs, and if in fact AI is more powerful than people realize, that the market is actually underperforming. And that as tariffs either become less relevant or fade away because they become less politically popular, and as AI proves itself more effective than people's wildest imaginations, that the market's level actually is less effervescent than we would all rationally come to believe, and thus the value in not thinking.
The value in not thinking has certainly proven itself out time and again. There's absolutely no question. I mean, you can get yourself into all kinds of knots thinking, but the market clearly is, by definition, one would think a market that is any kind of feverish would be characterized by not thinking, and there is absolutely no telling when the fever breaks. So, I mean, I ran away from my shorts on Friday. When the CPI number came and hit the way it did, and the markets responded the way that they did, that was curtains on my index shorts. I left right then and there.
I mean, that I just want to. It's so funny how things get framed too, because I've seen stuff that said CPI came in lower than consensus, but yeah, it's still high, right? And we're cutting into high CPI, and it gets to my point. Like, that's clearly should be one of them, but it's not. But the thing I asked yesterday on First Car, and I'm gonna ask it again here. Like, what are the three things that scare you right now about equity markets? I mean, it's true. There's no thinking going on and people are buying, but what should they be afraid of? But truthfully, that should be one of them, right? And it doesn't seem 100%.
I think for me, the number one thing that scares me about the markets is that they have assumed that everything is already great and that all of the potential risks will work out. which raises the question, well, what else is there? Like, at what point does the price reflect all of the optimism that there is to have about the known knowns? That's really it.
That's what it boils down to, it seems. I don't know. I mean, maybe it doesn't even seem, typically it would have been a little bit nerve-wracking that, two world superpowers are meeting and markets wouldn't have necessarily taken it so well. They've taken it so well before they've even said one word to each other.
Super well. Yeah.
It's a trip.
And that's really sort of where my kind of view on this, and again, I don't have exposure on it at this point. I will once the price action wants to tell me that something is wrong. But you look at this and you go, okay, well, the big scary things were Fed rate cuts, yes or no, inflation scary or not scary, escalation, US and China, yes, no. It seems like the markets have resolved across all of these various things that the answer is already everything's fine. And a lot of these things haven't actually resolved yet. But the markets have basically said, listen, our baseline is everything is cool. And so you look at that from a price level perspective and you go, okay, this is the price for everything is cool. How much more cool are we going to be? Maybe the earnings answer that. That's another big what if here. Maybe we get some really stellar numbers out of what's on the menu this week. Because Wednesday then, if the Trump meeting and the Fed become non-events as far as Wednesday goes, then we've got Microsoft, Google, Meta, and then we've got Apple Thursday. So if nothing else, in my mind, it's going to be very difficult for these markets to sell off in the near term, if only because they're waiting for the next event risk basically until end of day on Thursday.
Yeah, that's probably the only potential chance to see for markets possibly falling is after those earnings for some odd reason. And again, I don't expect them to miss, but I like to think of earnings in I mean, obviously they are current cycles. I like to think about them like you sort of see similar things in cycles and you sort of see names mooning during certain earnings cycles and others not. So far, what we've seen from some of the big ones, and really there's only been two so far, was Netflix and Tesla, and both of them retreated for separate reasons last week. I don't know if that's a situation of, you just didn't give us enough. I mean, I think Tesla kind of did miss, but I don't know if that becomes a situation. Do we not see enough? Given all these investments that we're seeing, given you hearing intraday big moves and big deals from Qualcomm and AMD, is it enough to justify whatever earnings numbers and EPS that we get Wednesday and Thursday with these big names? Is it enough, or is it going to not be enough? And then the market gets a little weak. That's the only thing I could possibly see. But outside of that, I mean, this is the first time in a long time I can't think of like 3 or 4 things on the wall of worry. I really can't. You can manufacture, but truth be told, there is nothing that is bothering this market day in and day out that we're talking about. I really don't remember the last time that happened. I mean, even in 2021, which is a really good market, meme, all of that, people talking about, these stocks, this is ridiculous that they're like, that was a bad thing. And we all knew it. It was too much volatility. Those names looked crazy. It was FOMO like you'd never seen. Well, like you hadn't seen in a long time. And that was kind of scary to see that. This is FOMO, but this is almost like 2017 FOMO, except with a lot of other different things going on. Obviously a lot of it circles around the Trump administration, let's be honest, with regard to like China stuff and rare earth metals and quantum computing potentially and just all of those things. So this is a fascinating stock market. And like I said, this is the first time in a long time I can't tell you 3 or 4 things you should probably be worried about because stocks might fall on those.
How many? Go ahead, Elliot. Sorry.
Oh no, please. I was gonna pivot us into how we might still benefit from the Trump Xi kumbaya, but you go first.
No, I was just gonna say, how many times does this have to happen before you just buy the dip?
Once. I mean, that's what I see in the stock charts, right? I mean, You know, a
Yes.
few days, what was it, 4 days ago, we had a little dip and it was bought. You mentioned the 10th of October, that dip was bought.
That was a big one.
So
That was
over the
bought.
last couple of weeks, it happens maybe once and then it gets bought.
Yeah.
And truth
I
be
mean,
told,
it's-
I don't even remember why we dropped on October 10th.
China, ostensibly. That was the whole oh no, 100% tariffs on China on November 1st because the trade deal is XYZ in the wrong spot.
And see, that's why I don't even remember, because remember we said at the time, wow, we've been hearing these headlines since post April,
Why
May.
are they responding now?
Exactly. Yeah, remember? That's why I
Yes.
forgot.
Yes. Yes. Well, and this is the really interesting thing, and why I start to kind of think like, okay, have we seen all the good news that there is to see? Because the market is responsive to things suddenly. And then when those things get resolved, it gets exuberant for a day and then goes, wait, what? And stops. Now, obviously, CPI, woo-ha, we break the rage. It's the first piece of real data in 3 weeks. Shutdown continues. But we get a special dispensations. We get one piece of data. Ooh, sigh of relief. Okay, over the weekend, we diffuse Wednesday's meeting with Trump and Xi. Ooh, sigh of relief. This is all event risk. But these markets outside of these periodic, like syringe of adrenaline to the neck moments, it's not finding natural lift. Now, that might mean that it was worried about those things, and now that they're resolved, it will find natural lift. Maybe. I don't know. We'll see. But it is seeming to be kind of responsive to news flow, as bull markets usually aren't. Bull markets usually could care less about the news. They're just going higher. And that's really what we've seen since April, the Liberation Day lows onward. Is the market has said, tariffs, whatever. Inflation, Fed. It's a supernova. Who cares?
Well, look at the
And-
chart. Look at the gap higher this morning, for God's sake.
That's right. In response to news. So suddenly, at least we care. And either we care because we care, or we care in that the potential for shenanigans has been diffused and the supernova is back. Could be. I don't know. But whatever we've seen over the past 48 hours, Friday and today, is news response. CPI response, China, Besant painting the tape pink response. That's really it. Now, maybe we have independent levitation from here. No idea. But, and I'm not in it because I don't know. So I'm not trying to bet against this thing. I do have an interesting question for you gentlemen on crude oil, because if all is great in the world of the US and China, one thing you could get at this conversation, because recall this jump in crude was mainly about the US sanctioning Rosneft and Lukoil. So, and China obviously likes their cheap crude. Much of this sanctioning is the kind of thing that the US did to Huawei once upon a time, where it basically said, look, you can either do business with the US or you can do business with Huawei. You choose. It wasn't so much aimed at Huawei as it was aimed at everybody else. It's like that scene in Thank You for Smoking where Aaron Eckhart's trying to convince his son that vanilla is better than chocolate ice cream. And at the end, his son goes, but you haven't convinced me. He goes, but I'm not trying to convince you. I'm trying to convince them. And so it's sort of policy like that, where you go, well, we're not so much attacking Huawei as we're saying, if you third parties do business with Huawei, you're not doing it with us. So you pick. That's what's been done with Lukoil and Rosneft now. So the question becomes, is this a thing that Trump is going to trade to Xi this week? Basically saying, you keep buying Russian oil. India, we haven't finalized the deal with yet, but you keep going. Is this geopolitical risk for us to sell now?
I mean, I think
Disclosure, I've sold here.
Meaning that oil's mini spike here is an opportunity to sell on geopolitical hype, basically.
Yes, because we've stalled. And we haven't come down yet around this idea that all is well in Xi-Trump world. So maybe this is a latent opportunity, like a second order idea. Stocks have already bounced, but this has not sold off yet.
I mean, I think it's possible, but if that's the case, this ain't high enough for me. I saw copper. I saw what happened there. I'm not selling here. I can tell you that. I mean, it's got to be like 70 to 80 for me to get interested. And again, he's shown he knows how to move markets. He enjoys moving markets. I'm not going to lie, I would too. But he really likes. I feel like this could be higher for me to really get interested in selling, but it's clearly somewhat of a bargaining chip, I think.
You'd figure, because who are these sanctions aimed at on the big Russian oil producers? I mean, yes, ostensibly they're aimed at Russia to the extent that stopping those huge companies from making money on oil directly impacts Russia's ability to finance the war in Ukraine. But through what vector of action, as it were? By saying, we now have these companies on our entities list. You can't do business with them and with us. You've got to choose. What you're saying is, hey, buyers from these companies, you got to go elsewhere. Well, who are the buyers? Overwhelmingly, it's China and India. And he's meeting with Xi this week. So it seems like crude is very much on the menu here as far as things they could agree on.
Good point. That's something to keep an eye on this week because, yeah, I mean, there's obviously it's of importance to both of our two economies, right? I mean, we're the two largest, and so obviously China has a vested interest as well.
So how did you do it, Ilya?
So the way I did this was by buying USO puts, and what I did here was I went a good deal out. So I went all the way out here to December, and you can actually see it right here. So what I did, rather than basically go at the money, I wanted to maximize capital efficiency here. So I went where the liquidity is and bought this put vertical. So 71 to 64. And if you look at what this looks like, essentially, you're looking for something like a break through this underside and to catch back to here. In other words, to say this bounce was wrong, this break was right. This is some sort of geopolitical shenanigan situation over here. So if we get back under here, we've undone whatever this is, and we're looking for this as the move. Somewhere into here.
But guess what, though? How about China doing this kind of a similar thing with soybeans? How about that?
Yes.
They're saying, "Hey, yeah, we'll you do that. We'll buy some soybeans. We're willing to do that." Big move today there.
Big move today in soybeans. Yeah. I
I mean, are you suggesting Jamal short a short soybean spike as sure as Ilya's suggesting a short oil spike?
Yeah, I'm saying if you believe that these guys are all sort of using these things as bargaining chips, this is definitely the way to play them. You could take the other side at some point in time. I don't really want to short either one of them. I don't feel the same way, like obviously I did about gold last week, but I think that's clearly what's going on here, right? Like these are the different bargaining chips that they're using with the talk with this whole deal. I mean, they've said they've come to an agreement on a range of issues, and obviously these are clearly two of the issues that are at stake right now, along with rare earth metals.
Well, and it's really funny too, because the degree that the president has become upset with Canada and stopped negotiations around an ad that the Ontario provincial government put out there. I mean, he basically just pulled the ripcord on this thing. Makes you sort of think, okay, Besant and his counterparts on the Chinese side have negotiated this whole thing, and then she will nudge Trump the wrong way or shake his hand weird or whatever. And this whole thing goes up in smoke for no apparent reason.
I mean,
who cares what the provincial government in Ontario did?
I gotta say, look, politics aside, that was a great ad. I mean, look, can we just talk about it for a second? I mean, look, it not only was it a great ad, it was great placement. It was during America's pastime. That's pretty good. That's pretty good. And to use just a speech that's a legit speech from Reagan. I mean, it was great. I can't lie. I mean, that's pretty good. Canada got him on that one. There's two things that I just can't stop watching right now. It was that, just because of the way that it was done and clearly where they're hitting at, and the news around this gambling ring. It's insane to me. Those are the two things that I just can't stop paying attention to. But that was a pretty good ad.
Update the folks on the gambling ring, because I don't think I'm fully up to speed on this chestnut.
The long story short, just the gambling ring involving the situation with some former NBA players and potentially maybe even some former NFL
that
players.
gambling. The Chauncey Billups.
Yes, that one. I can't stop reading on it. I can't stop reading on it. But the ad. I mean, that was really interesting that he decided to shoot up tariffs on that. Honestly, though, I didn't really see anything move. Did the Canadian dollar move on that? Oil,
not really.
Didn't really. I didn't really see a whole lot move on that in the current recent threat. So I don't know. Maybe that's just taking the back burner right now. Well, to this, it clearly is taking the back burner to the U.S.-China relations.
The Canadian dollar has been an interesting character here. We can see it's really marched lower in a much more orderly fashion than a lot of the others. It's really been just very consistently, steadily sold. And I've been short. I'm doing it on the spot side as well as on the futures side.
Nice.
There's a couple of things I have on the spot side, and this is one of them.
I was about to say, now you're going to show us your real portfolio.
Well, I mean, this
where you
is what
really
I
live?
actually have on. This is the follow account. In fairness, in my actual SpotFX portfolio, these trades are larger, but this is what I have on the spot side. For example, dollar yen, which I'm not going to even touch on the futures side because I need to manage size more than the entirety of a 6J contract. Same thing for the franc, and Singapore dollar is not even available on the future side. So I have these things on, and of course I have 6C in miniature, so M6C or MCD is the ticker there. So I have this on. They've got a policy meeting this week as well. Not that anybody's paying that much attention.
They're probably not going to move anything, right?
They're cutting.
Well, yeah. Oh, okay. So, speaking of, what's the consensus on all these meetings this week? By the way, I mean, we got us, BOC, like you said.
We got us. We got the ECB and the BOC.
And what's everybody thinking about doing?
So Fed's cutting.
I know you're boys
Canada's
with all
cutting.
these central bank people. Let me know.
Yeah, the ECB is standing still. They're keeping it at 215. They're not going anywhere. In fact, if you look at their version of Fed funds futures, which are ESTR futures, you can see what's going on there. Let me see if I can get this up on the screen.
Wait, where are they? Where'd you say they're at? What? 2? Where's their rate right now? ECB?
They're at 215.
Yeah, so they were cutting before us,
2.15.
right? I mean, they were cutting before us.
Yeah,
anyway.
yeah.
They can't do shit.
They went before us. So here's what we've got for them. These are ESTR futures, and we can see that for this year, nothing else is on the menu, and for next year, nothing else. So we've got stands still at the ECB at this point.
Yeah.
At this point, it's really about the Fed. So if you look at what's going on there, that's really what we're looking at. And you can see here, by the way, speaking of the Fed, that little baby pullback in the bonds, it's already coming off a very similar sort of thing as the last time I added into this position, which was this pullback here. And I'm doing it through TLT calls, verticals. So can I get you gentlemen, speaking of this, can I get you into something at the long end, perhaps?
Long the bond here, you're saying on a little pullback. I mean, The thing is, of everything that's been discussed heretofore in this aforementioned conversation today, it is the selling of the soybeans and the selling of the oil that most intrigues me.
I'm selling the oil at this point.
I think the selling of the oil and the soybeans, just on the Trumpianism of the whole situation, is the most sort of obvious and compelling. I mean, if I'm long the bond, must I also be short the NASDAQ?
No, I don't think so.
So tell me why I'm long the bond at this particular moment.
I think you're long the bond if you're long the bond. On one of two sort of narratives, and if you sort of believe that narrative or not, then there's the price action, which speaks for itself. The trend is from the lower left to the upper right, and you're stair-stepping higher. Every time you break a former high, you come to retest and go again. And that's been the story going all the way back to essentially May. So the narratives, I think, that you're looking at, either one, more rate cuts, more and more and more rate cuts, that essentially the markets are right to expect more easing than the Fed has owned up to. I am less inclined to buy that narrative. I am more inclined to buy the narrative that the markets are wrong to think that the Fed is going to do as much easing as they're saying, let's say next year, and that what this will mean is more easing will go further down curve. That really all of the easing that the Fed is thinking about for next year is as minimal as they suspect, and that actually the bulk of rate cuts will be maybe 2027, 2028. And that what this will mean is that the curve will sort of twist rather than all go in one direction, unless, of course, something is materially wrong. So if you look at the 2-year here, you can start to kind of see it. Just looking over the past, let's call it, week or so, the 2-year has had rates come up. Whereas if you look at what's going on at the long end of the curve, there we go, not really. We tried to do this same pullback, but obviously even that's not working. So the 2-year from here is pointing this way, whereas this, again, this is the 17th, from here is clearly up or flat, depending, but is much better supported. So I wouldn't be buying the short end, but I like the long end. And I think that's the narrative that makes more sense.
And that's saying essentially, I mean, with the 2-year bouncing like that a little bit, it's saying that maybe, you know, the market has come off a little bit too much, right? But you're saying that 2-year is, well, you're not trading the 2-year per se.
I'm
you're
not
just
trading
saying,
the 2-year.
You're just saying that reflection of what's happening in the 2-year that seems to have hit the 10 a little bit is too much. Kind of.
Yeah, maybe. So here's the SR3Z6 contract. This is December of next year as a kind of benchmark for what the markets are looking at. And of course, as ever, this is the quote. So this is 97.005. This is the price of the future. If you want to get to the implied rate, you subtract from 100 that quote. And what you end up with is 2.99. In other words, 3%. Now, the current Fed rate would need to go down 125 basis points to basically land us there.
Yeah.
So, and we've got 50 basis points left for this year and 25 basis points that the Fed has projected for next year. And so the markets are about 50 basis points ahead of the Fed by end of next year. So that's where I think the 2-year is going to have a hard time going higher. The markets are already well ahead of that.
If I could extrapolate, it would seem the one thing that, to get back to the top of the show in a way, seems like we kind of just found it. It would seem as though the one thing that we're not accounting for is a potential policy mistake, right?
Yes.
I mean, that's it. That's it. We found one thing. We found one. We found one thing. We should be, this is good. This is good news.
The wall of worry has a brick in it,
Oh
everyone.
my God. Oh my God.
We found a brick.
We found a brick. Yeah, I mean, that seems like the one thing.
Yeah, it does. It does seem like the one thing. I mean, this has really been the most interesting part of everything that's been going on vis-a-vis the shutdown, is we haven't had economic data to essentially resolve what is the most sort of glaring disconnect just numerically.
That's not by
about
accident.
what is going on out here. Is the markets and the Fed are 50 basis points apart for next year, and nobody seems to be caring one way or another to reconcile this gap. I would surmise, because there is not data to base that reconciliation on. I mean, how do you reconcile it? Based on what?
Yeah, it's not by accident, I don't think. You know, I mean, this is the same administration who talked a little bit about the idea of eliminating quarterly reports for earnings. So yeah,
I mean, in fairness, in a lot of the world, it is 6-month reporting.
Yeah, but we're not a lot of the world. That's my answer to that.
We are the liquidest. It's not a word.
Make it work.
We are the most liquid, the deepest, the widest used financial market across whichever asset you want to mention. And really, this is why the dollar is what it is. This is why our economic weapons work as well as they do. It's not even just cutting people off from the dollar. It's cutting off people from the financial system that is indispensable. There's just not an alternative.
I mean, I'm really happy we found one brick. I don't know about you guys. I'm happy we found one brick. This is important. This gives us the opportunity to eventually start looking. I didn't say buy yet, but start looking at some puts to buy on the market.
Mm-hmm. Yeah, I mean, this is kind of why my head goes where it goes and says, well, okay, so We got the rate cuts priced in for this year and next, and more than the Fed is saying by a good mile. Okay, cool. That's good news. We've got the China-US kerfuffle at the beginning of this month apparently diffused again. Cool. Earnings at this point are looking pretty solid so far. I mean, obviously we have a big batch this week, but looking at FactSet's most recent numbers, sort of summarizing what's been going on, it's not bad. There's a solid quarter of earnings here, just all in all. It's not amazing, but it's also not terrible by any stretch of the imagination.
And to backtrack on that again, I just think that the only thing that potentially happens is, they're going to be good. Is it enough, right? With regard, especially to these big names, right? Is it enough to satisfy?
Right. That's why sort of my head goes to, okay, well, everything is obviously fine, and also things are at record highs. So do we reflect all of the fine now? And are we a bad earnings report or a weird Fed mention or something away from challenging these assumptions? Maybe. I wouldn't be, I'm not looking to fight the big indexes here though, until they show some level of weakness. Before we sign off here, we'd be remiss if we didn't take a look at gold, talking about things that we're fighting. I'm fighting this. I sold in here. Obviously, I missed this wonderful move because I had no idea, as we talked about last week, that 1 ounce gold futures exist on our platform. Live and learn.
Oh yeah, MGC.
Apparently. Yeah, apparently that they do. So I did this in GLD, but obviously by the time this move happened, the cash equity open in the U.S. was already a price taker of what happened overnight. So the place to sell might have been here, but this is before the cash equity open. So maybe even here somewhere. But in any case, now that sort of it did this, I sold calls in GLD. I'm holding them. Would anybody like to sell some gold here and maybe look for the next leg?
You know me, man. I'm a trader. I'm interested in a little bit to see the bounce now. It's been a battleground here at 4,000 for the last 24 hours, it would seem. I could totally see it falling. Look, don't get me wrong. I'm not saying it can't. I just want. It seems to be holding, but we'll see what happens. Again, right now it's below 4K. It's going to be a long night for longs and shorts here. I mean, again, there's a lot of people who bought into that October 13th move. So I think we're going to find out quickly here in the next couple of days, or especially around the meeting, what happens.
Yeah, I mean, really quickly, I'm just, again, ticker agnostic, just looking at the price action only. We had a low here. We've taken out that low. Maybe the next leg is upon us, but it's a little bit tight here as far as risk reward. So I'm not touching it yet. I would love for it to bounce into here somewhere and hold, and then I'll sell some more.
If it gets below 3,900, I'm going to be out.
Yeah. Yep. And with that, overtime is out of time. A spirited conversation, as always. Thank you, gentlemen. Don't go anywhere, folks. We'll be back in but a few seconds with macro money to go all of the various macro shenanigans on the menu this week. And we'll be back for this conversation in a mere 23 hours. So sit right there. Stock market's too optimistic about China and earnings and the Fed. That's the question on the minds of traders as we kick off this week with record highs for the big indexes. And the question becomes, well, what could go even more right? And if that list is too short, are the markets vulnerable to a buy the rumor, sell the fact kind of a response when all's said and done? That's what we're going to explore now. Macro Money begins right now. Welcome to Macro Money. This is ASP, head of Global Macro here at tastylive. And what we're going to explore here, as we've just alluded, is an action-packed week on the calendar, but one where the markets may have already done the heavy lifting. And the question from a speculative perspective being, are we now about as chipper as we could possibly get on all of what is coming in the immediate future? And what we'll do is we'll take a look at how the markets have done with this sort of lead up from last week coming into this week. Take a look at the price action and consider what that looked like, and then take a look at what is setting up to shape next steps here and whether the markets still have some juice to squeeze out of those next steps. So here is what we did last week. We can see here another supportive week for stocks, albeit relatively modestly so. S&P up 1.9%, NASDAQ up 2.1%. So we continue to, as it were, crawl higher. Not huge gains, not huge increases in momentum here, but nevertheless, upside progression continues. And if we look across the rest of the asset universe, we largely find a sort of familiar narrative. Now, we should mention that much of what we got here from stock markets last week came thanks to Friday's US CPI report. That was the real big catalyst that took us through October highs and not only erased that big sell-off that we had across markets on October the 10th, but took us north of those levels. And of course, we have continuation on that today. Markets continue to push higher with a gap at the weekly open, thanks to news over the weekend that U.S. Treasury Secretary Scott Bessent and other negotiators from the Trump administration have reached a whole range of preliminary goodness with their Chinese counterparts, and that the thing that's going to happen next, the big meeting with U.S. President Trump and China's President Xi Jinping this week, is almost like a rubber stamp exercise, where they are going to meet to approve all of these great things. And to paraphrase Mr. Bessent here, that 100% tariff on China due to kick off on November 1st, that's basically, according to him anyway, off the table. And so a whole range of interesting things perhaps on the menu here. The standout last week, interestingly, was, of course, crude oil, 7.6% jump there. That's after the U.S. Took sanction measures against Lukoil and Rosneft, the big Russian oil producers, and took the approach similar to what has been done before, for example, to Huawei, where rather than attack a country, these measures essentially speak to third participants in markets, so anybody that might do business with these companies, to say either you do business with them or you do business with the U.S., you choose. And of course, that means access to U.S. credit markets, that means access to the dollar, so on and so forth. And so much as Huawei was squeezed out of the 5G global infrastructure by the U.S. saying, if you do business with them, you're not going to do business with us. It seems like we've taken a similar approach here with these major Russian oil producers as a way to try to say, well, here is a way to implement sanctions whereby they would be more difficult to circumvent. And rather than essentially say, oh, well, Russia doesn't have the shadow fleet or various other workarounds to stop this, we're instead going to go to the customers and say, if you do business with these places, it's you that's going to get cut out. So do the risk management thing and don't do business with them. On this basis, of course, crude oil jumped higher. And we'll see if this continues to work out this week. One of the key things to consider here, of course, is whether this might be something that is part of the Besant and Trump and China conversation that we've been at least somewhat promised, and that seems to have the stock market all kinds of happy at the start of this week. China, of course, the buyer of consequence of Russian energy at this point. India too, but certainly China front and center. And so if there are these new restrictions on buying Russian crude, perhaps there is a deal to get done here. Perhaps this is part of the U.S.-China negotiation. And if so, then crude might have something of a wild week this week after that major rally, either building on it or coming the other way. It would seem, one would imagine, that if it is all roses here going into this meeting for Trump and Xi, then there is some sort of a release valve that is going to get turned here, and crude may very well deflate as a consequence. Gold came back a little bit last week, down 1.8%, but of course, it's still only a tenuous decline. It is a little bit lower again today around this U.S.-China hopium, but we'll see if that continues. It does look like some speculative appetite has been coming out of gold here, and it seems to be receding, but so far, relative to its aggressive gains, the pullback has been generally modest. The dollar continuing to look strong last week, up against both the euro and the yen, with the yen having the outsized weakness there as the new prime minister, dovish as she is, manages to cobble together a coalition and actually take office. Bitcoin doing its risk appetite on steroids thing, where when stocks are up, it is up more. And so it bounces 3.8%. But of course, that's after an 8.8% sell-off. So on net, the down move in Bitcoin seems to be generally continuing over the past several weeks. Now, it was the US CPI report that really got markets in a happy mood on Friday. We can see what happened here. Inflation came in a bit lighter than expected, 3% on headline and core versus 3.1 expected. And if we look at the breakdown here, we can see still the majority of inflation, of course, still in services, 2.12% or percentage points of the three at the headline is still services. Goods, though, we still see somewhat elevated and inching higher, but not worse than it was in August. So August gave us the highest goods inflation for the better part of 3 years. But it doesn't look like things got worse in September. And so you have this sense here that perhaps you don't really have a major sort of spook here, or